We have been closely eyeing what's taking place in the Phase 1 trade deal between the US and China for weeks, with every narrative reported around the Chinese wanting a rollback on tariffs, the US demanding more in terms of intellectual property. But the reality is this morning we're dealing with 3 new tariffs, and it doesn't relate to the US and China. This is around Brazil and Argentina on steel and aluminium imports, and potentially also the French when it comes to retaliation of a digital services tax. So the narrative very much moving to one of further uncertainty for international supply chains based on what you've got from the White House. So as we open up for trade, stocks here in Europe dealing with a fairly weak session yesterday, so trying to recover some of that ground, not helping up the narrative too. Weak data out of the United States on manufacturing. As we begin the trading session, we're just pushing a little bit higher, about 1/3%, and signals were suggesting that the French and German market might try to reclaim a little bit of territory after the worst trading day in 2 months yesterday. Let's take a quick look at what we're seeing by sectors in the early part of this session as we move into the trading day. Technology at the top, basic resources at the bottom. This sector very much involved in the tariff war that we're seeing around steel and aluminium. It impacts some of the big miners, BHP, Rio, for instance, and those stocks this morning, BHP down about 0.9%, so a reversal there, and Rio also on the back foot. Autos trading a little bit weaker, just a fraction down, along with oil and gas and household goods. Don't forget, some of these might be embroiled in any tariff war if the US goes after some of those French goods. Real estate positive, industrials also trading higher, so not much red ink, and percentage gains to the upside fairly modest. Construction 4/10s higher at this stage. Telcos in the green. Now the top performers as we start to warm up. Food and drink about 0.5% higher. We've got utilities now moving to the second top position, and technology still holding out in this top spot, 0.8% high. In contrast to some of the selling that we saw on Wall Street, where the Nasdaq was the underperformer, and investors closely eyeing the selling in that sector. We want to take a quick look at what this means for the European markets as we start out. It's still a soggy trade for the FTSE here in the UK. 7271 is what we're watching, down 13 or 14 points, 0.2% softer. A lot of electioneering going on here, and the market closely watching whether President Trump's visit has any ramifications for the political parties here. The rest of the markets, we are seeing a slight improvement for France. So a little bit underwhelming, which is reflecting some of the tariff threats, no doubt, versus what you see across the rest of these charts. Strong day for Germany, almost 0.6 high, and quickly reclaiming 13,000 points. The Italian market solid, following what we're seeing, 0.7% on markets, 155 points. Triple-digit upbeat day was anticipated from the outset, and that is closely coming onto the boards. We've already got gains for Spain, and for the Swiss market, not as strong as some of the others, but still decent. Well, let's get to the latest tariff threat, as President Trump has slapped tariffs on Brazilian and Argentinian steel and aluminium imports. In a tweet, Trump said the decision is in response to what he calls massive devaluation of their currencies. He added the measures would be effective immediately. Officials from both South American countries were left wrong-footed by the announcement and say they will contact Washington for discussions. It was interesting to hear Bolsonaro's comments too, that all they have are commodities. So effectively saying it's quite hard hit when you're targeting some of the key exports from the country. A lot of those steel exports going into the United States. And if you think about why commodities have been weaker, it's been because there's been so many concerns about the demand story because of the trade war that's been waged by President Trump. So here's the impact across on basic resources. Anglo-American down 1.4%, but outpaced by Glencore, which is sliding, in the same range currently at the moment. Let's take a look at the rest of the tariff threats that we're facing today, and the reaction across on some of the French stocks. The US is threatening tariffs of up to 100% on $2.4 billion worth of French goods, including handbags, cheese and champagne. The move comes in response to France's new digital services tax, targeting US tech giants, which US Trade Representative Robert Lighthizer described as, quote, unusually burdensome. Quick look at the stocks. So if you just consider where we have seen some of these move in recent weeks, LVMH Kering had the most headroom after escalating towards peaks that we've seen for 2019. The rest of these stocks have come off some of the highs, and maybe that explains why you're still seeing a little bit of support for Pernod and Danone in session this morning. 2 green patches there. So let's get out to Charlotte, who is at the US Ambassador's residence in London, where US President Donald Trump will meet his French counterpart Emmanuel Macron this afternoon. This 3% digital services tax very much in sight now for the Americans. Charlotte.
Hi, Karen. Well, yes, the talk here, the meeting, the bilateral was meant to be all about NATO, and following these comments from President Macron about the brain-dead NATO. Two men that, in a way, agree on the fact that NATO, as it exists, cannot carry on, that it needs to find a new political leadership, a new future, that Europe needs to take charge for its own defense. They might disagree on the solutions to that problem, but kind of agreeing on this aspect of things. But of course, trade war and trade talks very much back at the center of the conversation, following the two announcements yesterday from the US Trade Department. One was following WTO ruling saying that Europe is still failing in addressing some distortion following some illegal subsidies to Airbus. And so the US Trade Department came out saying they might add some tariffs to the ones already announced in October that would affect in particular French wine, already 25% tariff announced on French wine. However, a lot of goods escaped this first wave of tariffs, leather goods, a lot of French cheese, and some of these other products were not impacted. However, last night the US Trade Department published a new list of goods that could be affected by 100% tariff, and this is following an investigation from the US Trade Department that started in July when the French Parliament voted their digital services tax of 3% on companies that would have 750 million euros global revenue, and 25 million of those made in France. France wanted to have a European response and have a European digital tax response. They failed to come to a consensus on this, so went their own way, went for a tax in France on its own. President Trump was very unhappy about this, saying it's unfairly targeting American companies. They came to an agreement at the G7 in Biarritz in August, putting in charge the OECD to come up with a common framework, a global framework for digital services tax. Now the OECD is expected to give its conclusion, to come up with this framework in 2020. The first conclusions will come in January, so that will be the first consultation. And this is when the US Department and President Trump will decide if and when some tariffs are put on these French goods in retaliation for this tech tax. If he considers that the evolution and what is being put on the table, what is offered on the table by the OECD, is good enough, then he might not put the tariffs on. However, this morning, Bruno Le Maire, the French finance minister, in a radio interview said he was speechless by the publication of this list, that he spoke to Mr. Lighthizer yesterday and saying that France and Europe will retaliate if some of these tariffs come on the table, that it's unimaginable to put tariffs now, that the OECD is working on putting a global framework on this. So no doubt all this will be part of the conversation between President Trump and President Macron here at the US Ambassador's residence in London, where you see all the security and all the preparations going on. So that will be very much part of the conversation here at 3 p.m. when they meet.
Charlotte, thank you very much for that. And I just want to spell out how complex this is when you take a look at individual names. For instance, LVMH, if it's targeted with handbags and champagne with tariffs, don't forget, it's a very complex time as it tries to ink a deal with Tiffany's in the States, as it tries to forge closer links with an American company. So spare a thought for Bernard Arnault at this point as he weighs up whether his goods across his sector or suite of products will be targeted at this point. And let's push on. Washington says it may raise tariffs on a variety of European goods after the World Trade Organization rejected claims by the EU that it no longer provides subsidies to Airbus. The WTO found the plane makers' A380 and A350 jets continue to be helped by previous European government loans. In response, US Trade Representative Robert Lighthizer said Washington would begin the process of exploring higher duties on European products. He said more information would be released later this week. And meantime, President Trump has admitted legislation backing Hong Kong protesters makes trade negotiations with China more difficult. Beijing has blocked US military ships and aircraft from visiting Hong Kong in response to the move, while the Global Times says it will soon release the unreliable entities list, imposing sanctions on those that harm Chinese interests. President Trump says Beijing still wants to make a deal despite the retaliatory measures. Jeff.
Ben Gutteridge is with us, Research Director for Brewin Dolphin. Ben, good morning to you. Just give us a line. We're obviously seeing the markets react this morning to the news flow overnight. How long are we going to see weakness in some of these markets for?
It's difficult to give a pinpoint date on that. And where we're coming from, it's a difficult day because we are more constructive on what's happening in the global manufacturing cycle. We do believe it's bottoming. We've always said that the bottoming out process is a choppy process. and can be frustrated by the key actors. Trump again reminding us that one of his favourite foreign policy tools is tariffs. But nevertheless, we would still retain a positive view. We think, efforts undertaken by central banks around the world, the modest evidence of thawing tensions between China and the US should pave the way for a recovery in the manufacturing cycle, and that means that this sort of day of weakness is potentially a reasonable buying opportunity.
So how do you price in the ISM data that we had overnight, which indicates that there is still quite a bit of weakness in the US on the manufacturing side? And we had a whole slew of data here in Europe yesterday that again just reinforces the idea that we're in contraction for that side of the economy.
Well, I mean, it certainly tests our thesis and doesn't play to our current narrative. But as I said, we do believe the bottoming out process is one that is volatile. It missed expectations yesterday, the US manufacturing print, but it wasn't. It was expected to still be in contractionary territory. We see a consumer around the world in decent shape, in very good shape, in fact, particularly in the developed world. There is this business confidence that's really weighing on global economic performance. And if you can get something on US-China trade, some days that you feel confident about that, others you don't. But there are motivating forces where we think we can get something there, then business confidence can return and manufacturing can be supported.
It's funny you say, the consumer's in good shape, but we had a fourth month of weakness in the US consumer data, the consumer confidence data. Do we just set that to one side and ignore that and say focus instead on the retail sales figures or the Black Friday sales or some other data point? Because that consumer confidence number does raise some concerns, it seems to me.
Yep, no, I totally agree that is part of the picture, of course. But with wages moving positively and beyond inflation, that is real wage gains, and looking to the future, there is reasons to believe that confidence can pick up and that consumer spending can be well supported. And it's not particularly levered. There's not a great deal of imbalances in that UK consumers. There is quite a high savings rate. So there are plenty of reasons to believe that whilst there are some wobbles, in aggregate, the picture looks pretty healthy.
Can I ask you both about luxury today? We've seen some selling in the sector, mainly because these are French names in the basket of stocks, and they could be targeted with tariffs, and we're talking about 100% tariffs. America has been a strong growing region for many of these luxury names, and we've seen an escalation to the point where they're trading around their peaks. Is it time to just take stock and maybe sell off some of these names?
Well, I think there are idiosyncratic stories within the luxury sector, but on aggregate, if we revisit our view on the consumer, that there is generally pretty good health, then that should be supportive. But you're right, the trade issues will inject volatility into the sector. I mean, at an idiosyncratic level, stocks like LVMH look a bit better placed to us, given the dominance it has in China and what we think would be a successful acquisition with Tiffany.
It gets messy though, doesn't it, Patrick? I know you've got a short on Richemont, but not on some of the others. If you did have a tariff imposed, it's not quite clear whether Americans would simply shop somewhere else and you'd see a bolster in those jurisdictions, or whether the tax would be imposed again at the border. So it's a little bit hard to tell.
Right? The luxury sector has been bulletproof, basically. We sold our longs about a year ago, which was way too early. They've got incredible returns on capital employed. Our worry is that they're trading at very premium multiples. We added a new short on CF Richemont fairly recently. We like the consumer overall. We do think, though, the luxury brands have had such a strong run and are now so richly valued that basically it's very hard to find any negatives on them right now. The only negatives is on the valuation. And it's like an elastic and a brick. You can stretch so far. Eventually, we think those premium valuations are going to start to matter. And this is one area where they really are pricing in stability as well as growth. If there's any issue on either of those, we think you may start to see a mean reversion there.
And that's the irony here, isn't it? I mean, even as we look at some of the data points that have been weakening, and Ben, I think you've done a good job at sort of pushing back on me as I've thrown these issues up. The markets have only gone up pretty much this year. And as we got a great piece on the CNBC website just showing which asset classes have done well. And the reality is they all have done pretty well, with WTI leading the pack. But the S&P up 25% at this point. And so I guess if there's the biggest question mark for me running into the next 12 months, it would be, can we replicate the kind of gains that we've already seen this year without seeing the Fed having to get more aggressive and central banks having to expand their balance sheets even more just to fuel this inflation in asset prices?
I mean, you certainly could have a very positive year next year. I mean, the end game of a bull market has typically been a very rewarding period, and we recognise we're in a very mature stage of the economic cycle. So on that basis, history suggests it could be a very rewarding year. I don't think we'll be quite so gung-ho as that, but the evidence, as we see it, suggests it would be a positive year at the very least.
I think your question was so spot on. You didn't talk about the earnings potential. You didn't talk about revenue growth. You talked about central banks. And that's the driver of markets. I think since the Fed in September started expanding its balance sheet again, they're calling it not QE, but 75 billion every day is being added to its balance sheet. That's really created liquidity. It's pushed markets up. And earnings are down this year. S&P 500 earnings are lower than they were last year. I think Q1 will be the one good comp they'll have, where Q1 2020 will be good versus 2019 because you had a very weak Q1 2019. After that, it's very difficult comparables. And the S&P today, well, not today, the S&P on Friday was trading at 2.3 times sales. Unprecedented. Tech bubble didn't get up to that. September last year didn't quite get up to that. And when you're paying unprecedented multiples, there's air pockets. So if you do have any headwinds, if you don't get the central bank easing in a time where the economy is still growing, I think it's very hard to justify these levels. And EV to EBITDA, same thing, 13.5 times, not unprecedented, but it's only the tech bubble where it got to there. We've been rotating into Japan, which is trading at 8.5 times EV to EBITDA. That's the same multiple the S&P fell to in 2009. So we're looking for stocks, for regions that aren't at all-time highs and trading at more reasonable multiples.
But if you're thinking of strapping the parachute on come the end of the first quarter of next year and jumping out of the burning plane, being in Japan is not going to help you, right? All of these markets will go down together if we get ultimately that reckoning around fundamentals.
So we want to be long yen in that scenario, basically, where you want the parachute, you want to be long yen. That's a great safe haven. I don't want to pay the negative interest rates to be in Japan, but NTT Docomo, I'm getting a 4.5% dividend yield. Japan Post, a 4.5% dividend yield. And these are companies that are driven by a Japanese consumer. They're not exporting companies, so if there's a trade war as the catalyst, it's driven really by the Japanese consumer, and that's a very big yield premium versus, well, zero interest rates in Japan.
I mean, there's definitely an improving fundamental story in Japan, in that this sort of corporate governance, but also balance sheet strength. But, we have to sort of take into account market action and market behaviours, and those who sort of suggest that Japanese equities have that sort of defensive trait, it was sort of came unstuck a bit, certainly in the fourth quarter 2018. There is definitely a cyclical element, certainly to those who trade the market. So its defensive qualities, we've fallen for that before, and would be cautious on that moving forward.
Should we remind the audience that we still don't have a proper trade deal with Japan either? Only a limited one between the US and Japan. So this morning we weigh up the threat of more tariffs and more pushback of the Trump administration against individual countries. Couldn't that be a risk for Japan as well?
Well, yes. Japan is, to our mind, would be most dependent on Chinese economic fortunes. A trade deal with the US is a potential. Clearly, it's got one with the EU, potentially the UK in time. But there is modest stimulus going into China, which can be sort of supportive for Japan on sort of the global trade narrative. But yes, it's a globalized economy. It's an integral part of the global economy. Days like today when you have trade frictions sort of bubbling over, it's not helpful, that's for certain.
Thank you very much. You're going to stay with us. We'll come back to the conversation in just a moment here. It's been around since 1870. It's one of those old European banks that is now instituting a new round of restructuring. Big cuts ahead for UniCredit as the Italian banking giant looks to save €1 billion. The stock's trading up. We'll tell you a bit more about the details of the restructuring when we come back.
Right now on CNBC Make It. Think you've had tough... Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush. All with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
You're watching Squawk Box on the Market Open, and more big news out of the banking sector this morning. I want to take you to UniCredit and the reaction we're seeing in the stock price. Bounce 1.1% to this on news that it will cut some 8,000 jobs and close 500 branches. The move is part of a new strategic plan to lift underlying net profit to €5 billion by 2023. Despite the headcount cut, Italy's largest lender still plans to raise returns for shareholders and announced it is launching a €2 billion buyback program. Elsewhere, Moody's has downgraded its outlook for UK banks to negative from stable. The ratings agency blamed a deteriorating operating environment, which it says has weighed on asset quality and profitability. Moody's also said low interest rates and increased competition in the mortgage market have eroded net interest margins at most British lenders, seeing a bit of a split picture between the major lenders today. Jeff.
Terrific, thank you. Just a reminder to our audience, Ben Gutteridge is with us, Research Director at Brewin Dolphin, and Patrick Armstrong, CIO at Plurimi Investment Managers, is our guest host. I mean, one of the reasons perhaps we've got the UK down today, apart from the Moody's comments on some of the banks, is sterling's actually a little bit firmer. I just wonder how upbeat you are on the British pound at this point, given that the polls seem to be narrowing a little bit on the Tories taking this election.
Well, I mean, it is a confusing one. As actually we were talking earlier, there's been some weak retail sort of sales numbers, again, which you think would be sterling negative. But I guess, yeah, the momentum is all, there has been a modest turn in momentum. Some of the polls are revealing that the Labour Party are narrowing the lead. And in aggregate, you think the market reaction would be negative for sterling. So, you know, we don't have all the answers day in, day out. I would have thought today would have been a positive day, a weaker day for sterling.
Is a Labour win the disaster for sterling that some have painted it as? I mean, there are other arguments here.
Yeah, for sure. Well, that's a great point. I mean, there are varying types of win. I think a majority seems out of reach, and in a majority you would get some of those more radical policies that typically would frighten international investors. So in a minority government or some sort of coalition, some of those policies may not be able to be delivered. And of course, with a Labour government, the second referendum would guarantee our place in a kind of customs union, either the existing one or one that looks very similar. And in aggregate, that seems to be what businesses are sort of talking about or voicing their preference is, the closest relationship with Europe as possible. So on the day, anything can happen. You get lots of sort of short-term actors in markets, but actually we don't see a cataclysmic event for sterling under a Labour administration.
Yeah. I think the Labour majority would be the only worry, because you're going to have a lot of the policies muted out by the coalition, and probably have a fragmented government after the referendum, where the SNP supports Labour up until the referendum, and then maybe you'll need a new election after that. So both parties are promising a lot of spending. I think any headwinds on investment that a Labour government creates may be offset by some spending as well.
Can I talk about short-term risks today? We're at a leaders' summit, and typically when you've got huge focus around state leaders, there can be ramifications for the incumbent. You've been around long enough and you've seen this narrative. Is there a threat, do you think, for being too close to Trump as it's perceived by Boris Johnson today?
Yeah, I mean, I think I don't know whether Trump is playing like a very smart game or the opposite. The way he's sort of tackling the global trading system. I mean, his biggest threat, and the one where there is sort of partisan support for, is China. And by upsetting, global partners, you risk having them on side in your efforts to overcome that sort of ultimate threat, as Trump would see it. So, it's almost working to the Chinese advantage that, US is friends with no one, with the UK, with Brazil, well, not necessarily the UK, Brazil, Argentina, Europe. We can divert our supply chains to these regions and they'll gladly accept. I'm really sort of confused by Trump's, by a host of his policies, or a few of his policies, but certainly this one, the way he's aggravating global leaders.
I think that sums it up nicely today. The confusion that we're dealing with on the news flow is quite extraordinary this morning with all these various tariffs. Thank you very much for joining us this morning. Ben Guthridge with us, Research Director at Brewin Dolphin, and Patrick staying with us, our guest host today. Ahead on the show, will President Trump ruffle a few feathers at the NATO meeting in London? We're live from Buckingham Palace next.
Got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to eat well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin Fresh by the Juicery, you can stay revitalized with a fresh assortment of juices and smoothies and get ahead of the cold. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At TradePoint, we know that big jobs can mean a big shop around. We've a wide range of products from kitchens to plumbing to electrical or timber, so you can get it all in one place, 7 days a week, making big jobs smaller. So, for all you need, when you need it, get to TradePoint or go to tradepoint.co.uk.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Trading higher, but basic resources underperform as President Trump restores tariffs on steel and aluminium imports from Brazil and Argentina. French luxury shares lose their sparkle after the US threatens 100% tariffs on up to $2.4 billion of goods, including champagne, in response to France's digital services tax. President Trump touches down in the UK for the NATO leaders meeting amid growing divisions in the alliance, but Secretary General Jens Stoltenberg tells CNBC allies should stand together.
I'm looking forward to the leaders meeting on Wednesday, because when there are differences, I think it's even more important that we meet, sit down and address these issues face to face, as we'll do on Wednesday.
And UniCredit's overhaul gets a warm welcome from investors as Italy's largest lender puts 8,000 jobs and 500 branches on the chopping block.
President Trump has landed in the UK, and this is a huge focus for markets after he delivered another tariff surprise that has roiled the stock markets around the globe. The White House announced levies on Brazilian and Argentinian steel and aluminium imports, sending Wall Street sharply lower. The US also threatened 100% tariffs on $2.4 billion worth of French goods, including champagne, handbags, and cheese. So a quick look at the market reaction. You can see the benchmark here in Europe is still in the green, but in context, we saw a sharp retreat yesterday, one of the worst trading days in 2 months for European markets. So where we are seeing the green coming through on many of the European indices, except the French market. So in contrast to a slight patch of green for the CAC, we are seeing a gain of more than 0.6 for the DAX, more than 0.8 for the Italian stock market. So French stocks are not participating in the rally or the recovery story that you're seeing in Europe today. Let's take a quick look at what is playing out by individual sectors too. We've got a couple of patches of red around household goods, which reflects the luxury goods sector in France, down by about 0.1%. Basic resources, a fairly weak day too, as we battle the latest news flow around Brazil and Argentina on steel and aluminium, which could have an impact on some of the commodities in the basket. Technology well and truly out in front, very strong gains, 0.9%. And in contrast to the sell-off that we saw on the NASDAQ on Wall Street yesterday, a quick look at the stocks, individual ones that are moving. One that jumps out, right move. You've seen a change in recommendation from Goldman Sachs from sell to neutral, so that's moved the needle on that stock. A couple of individual ones in retail doing nicely on the back of Cyber Monday, more than 2% higher for Zalando and H&M. In terms of stocks that are being sold off, still you can see Anglo American in the basic resources basket down more than 2%. Ocado still in retreat after that big deal that was inked with the Japanese retailer late last week, and then a bond issuance after that. So the stock is down 2.2%. Let me show you US futures. So much noise on tariffs, and after the sell-off yesterday, investors are very much watching the impact on US markets, whether it's another day of selling. But you can see a little bit of green moving onto the boards early on, Jeff.
So, Karen, something's been... I've come and joined you over here at the wall because this is such a fascinating day today that we're having. But this thought has been going around in my head all morning. If we're going to tariff French champagne, how are we going to celebrate NATO's 70-year anniversary, and how are we going to celebrate President Trump's appearance at a dinner in Buckingham Palace? Are they going to be uncorking the old Chapel Down, that wonderful English fizz, to celebrate?
Luckily, I think the cellars are well stocked with vintage champagne at Buckingham Palace.
You figure.
So there's already supply to tap. And don't forget there'll be delays if there's going to be any imposition of levies. So a little bit of room to stockpile, a little bit of room to consume.
All right. Well, let's just go through the story in a bit of detail here. President Trump is now here in the UK to celebrate the 70th anniversary of NATO. This gathering of leaders comes amid deep divisions among the current membership of NATO regarding not only spending pledges and who is ponying up the right amount of money. Syria remains an issue at large for different members. And of course, there is the whole relevance of NATO itself. Who is the common enemy now? Is it Russia? Is it China? Is it someone else? We have coverage from across London this morning. Willem is at Buckingham Palace, where that dinner later on, maybe with English bubbly or French champagne, we don't know, will take place. And Charlotte is outside the US ambassador's residence, where President Trump is staying, and she's going to address this very issue of the tariffs. But first, let's focus on the NATO aspect to this story. The US president will have a number of meetings with European leaders, including French counterpart Emmanuel Macron and German Chancellor Angela Merkel. President Trump will end the day at this NATO leaders reception at Buckingham Palace. So Willem, let's start with you. Clearly the knives are out on a number of issues at the moment. What do we think we will get, if anything, meaningful around NATO?
Well, the focus for President Trump over the last few years, as we all know, has been defense spending levels amongst NATO allies. The US, obviously the largest funder of the NATO alliance, and of course only a couple of countries when he came into office met the 2% threshold for defense spending that was by convention meant to be a prerequisite for membership. Since then, he's harped on about this again and again and again, and we've seen a number of countries step up their spending levels on defense. Yesterday, before he left for his trip here, speaking to journalists outside the White House, he talked about his role, as he saw it, in encouraging those spending increases.
It has not been a fair situation for us because we pay far too much. As you know, Secretary Stoltenberg said that we were responsible. I was responsible for getting over $130 billion extra from other countries that we protect that weren't paying. They were delinquent. So we'll be talking about that. We'll be talking about a lot of things.
That's not quite what Secretary Stoltenberg has said, but it is clear these spending levels are going up. A lot of the countries involved in doing that have planned this years ahead of time, so these increases were expected, and clearly the activities of countries like Russia in areas like Crimea have encouraged that move. The US, of course, has withdrawn from a nuclear treaty with Russia that's caused huge concern amongst some NATO allies. President Trump greenlit that incursion into northern Syria by the Turkish government and its military, again causing huge amounts of concern, prompting a lot of criticism both domestically and internationally. So these meetings today, including with Justin Trudeau, the Canadian Prime Minister, will be critical for President Trump as members of the alliance, together with him, celebrate this 70th anniversary.
Willem, thank you very much for talking us through those issues. Meantime, the divisions within NATO have been laid bare in recent weeks, with a war of words erupting between French President Emmanuel Macron and Turkish President Recep Erdogan. So let's get out to Charlotte for more at the US ambassador's residence in London. Charlotte, lots of issues for Macron and tariffs, but also with how he views NATO and the alliance, given all the pressures with Turkey.
Yes, Karen. Well, you remember this brain-dead comment from President Macron in this Economist interview a couple of weeks ago. Well, these comments came just the day after President Trump pulled American troops from northern Syria unilaterally without consulting its NATO allies. And of course, President Macron was dismayed at this decision, saying he found out about this decision through Twitter. And that's when he made his comments about the brain-dead NATO. And of course, A few days ago, President Erdogan came out in Turkish television saying that President Macron should check if he is himself brain dead. So they have a meeting later today, which should be an interesting one. And they will be talking about Syria, and Boris Johnson, the British Prime Minister, as well as Angela Merkel, the German Chancellor, will also be in that meeting to talk about Syria. So it was interesting to see Mr. Erdogan come out in defense of NATO to a certain extent after the comments from President Macron, because Turkey has been a difficult member of NATO as of late. It's an old member of NATO. It's been part of NATO since 1952 and crucial for its position between Europe, Asia and the Middle East. But of course, lately there's been some problems with NATO, in particular when the country bought an air defense system from Russia, which NATO allies have been opposed to, saying it goes against its security. Turkey, however, still went ahead with this purchase. US senators just a few days ago asked President Trump to impose some sanctions on Turkey after this decision. So far, nothing has been done by President Trump. This might be brought up today in this NATO leaders meeting, however, and no doubt that Turkey has been at the heart of the conversation here again. And this meeting today with President Macron before the leaders meeting of NATO overall will be interesting. We'll all be watching this afternoon when they meet at 3 p.m. London time.
Thank you very much. Well, the US president has previously hit out at NATO allies for not contributing enough to a defense budget. CNBC spoke exclusively with the US ambassador to NATO, Kay Bailey Hutchison, who said Trump still will ask for more help from allies.
I think President Trump has asked a lot from our allies, and I think he is seeing that the trend is going in the right direction. I think he thinks we need to do more, as do I, as do all of us. Our allies are ready to acknowledge that we need to do more. The 2% goal for defense spending is not something that came out of the air. It was passed in 2014. President Trump wasn't even president. But what it meant was that we were going to gear up to be much stronger in our deterrence efforts. And it took the 2% investment to make sure that we had all the equipment, all of the forces, all of the capabilities that we need to deter Russia and a looming issue of China, terrorism. All of these are factors for our collective security, that 2% is needed to have an effective defense. So we are pushing for that, continuing. We're not where we need to be, but we are going in the right direction. And I think that the president will acknowledge that.
Coming up on the show, record-breaking retail. The final numbers are rolling in for Cyber Monday, with the US on track for its biggest day ever.
It's the ultimate pre-market news show. Now,
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Psst. We've got something to tell you about the Honda Jazz. We know it looks small, but inside, it's really big. That's why we've created the small but big Jazz event, where you can get 0% APR representative and 5 years complimentary servicing on all grades until the 31st of January. The Honda Jazz, the small car with the big offer. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush, all with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10 gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Welcome back, everybody. Lionel Messi has won the men's Ballon d'Or award for a record 6th time. The Barcelona forward beat out Liverpool's Virgil van Dijk and Juventus forward Cristiano Ronaldo for top honours in football's most prestigious individual award. The American team captain Regan Rapinoe claimed the prize in the women's category, coming ahead of England's Lucy Bronze.
Weather alerts are sounding across the US as heavy snow causes widespread power outages and transportation disruptions. NBC's Gabe Gutierrez has more on the early winter storm.
Tonight, the first major snowstorm of the season is slamming the Northeast.
I'm happy I have off work because I wouldn't be prepared for this.
Tens of thousands of people are without power across the region. Massachusetts and Connecticut are bracing for more snow overnight. The powerful system now being blamed for at least 7 deaths nationwide.
Last year, we had a good winter, so, take it as it goes, I guess.
7 counties in New York are under a state of emergency. 300 National Guard members deployed. 42,000 snowplow operators are on alert for a treacherous evening rush hour.
Get ready for this weather. Take it seriously.
Police have already responded to more than 700 crashes statewide. Some parts have seen well over 20 inches of snow.
I'm Kathy Park in Albany, New York, where the snow intensified again this afternoon. And with more snow expected tonight, the digging out has been nonstop.
Among the highest snowfall totals in the Midwest, 23 inches in Minnesota, 12 in Michigan, and 6 in Wisconsin. The storm overturning semis from North Dakota to Connecticut. And in Pennsylvania, one driver was killed when his SUV spun out of control. Authorities urging drivers to be careful with more snow on the way. Gabe Gutierrez, NBC News, Morristown, New Jersey.
Cyber Monday is set to haul in more than $9 billion, a new record according to Adobe Analytics. Consumers spent $11 million every minute in the final hour of the largest US online shopping day ever. Meantime, British Cyber Monday transactions rose by 6.9% according to Barclaycard, the payments firm which processes £1 in every £3 spent here in the UK, said the figure adds to strong Black Friday sales growth of 16.5%. Patrick Armstrong is with us, CIO of Plurimi Investment Managers. Patrick, one of your themes with Japan, I note, has been the Japanese consumer. Do they have money to spend?
Well, they do. They're an aging demographic, which has its downsides, but it's a relatively affluent society. They're actually wealthy. They don't spend a lot, but it's probably a surprise to the upside this year, the Japanese consumer. It's been quite resilient. The economy's not done incredibly well, given it's an exporting nation still, but the consumer has been the strong point within Japan.
And the healthcare story as well, I think, is interesting in the context of an aging demographic, not only in Japan, of course, but in the UK and in the United States.
It's the one sector we've been adding to globally since August, really. And we think Bernie Sanders, Elizabeth Warren, there's political risks with U.S. healthcare. I think the rhetoric is much harsher than the reality will be. Even if we do get a Democratic president that is quite left-leaning, we don't think the dire scenarios for healthcare will come true. There's been a big push towards staples, utilities to get defensive exposure, and we think they're quite toppy. Healthcare is still trading at a discount to the S&P 500 on earnings, and it had a great quarter. Third quarter, healthcare was the star sector. Earnings growth 8% for healthcare, while the S&P was down 2 or 3%.
I want to ask you about Sony. This is one on your list, and typically for the audience thinking about Sony, think about a whole host of consumer products made by this company. But in recent years, it's been trying to pull back from being that dominant name in devices to being more of a provider of many of the supply chain parts. So how do you think about Sony now?
It's also a media company as well. So it's a company that isn't incredible. It's growing at a reasonable amount. It's growing faster than the broader market, trading at a market multiple, basically. It's got a strong brand, but it isn't the dominant monopoly-like position that it was 10 years ago in some of its sectors. So we think it's a retailer with a good profit margin, sustainable growth strategy. We like the media aspect as well, that traditionally trades at a higher multiple, but you're getting that at a market multiple with Sony.
I just want to call out a couple of names in the financial space, because we had the big news around UniCredit and more cutbacks as it chases profitability. And the two names you like in this sector, you've got a US bank, Citigroup in there, and you've also got MasterCard in the financial services space. So it seems like you want to be invested in these types of businesses, not the traditional ones here in Europe.
Yeah, basically the interest rate margin is a big headwind for the European banks. We like the bonds of the banks in Europe, but the equities, we think, have actually had a very good run over the last 3 months. They're still very cheap, but with negative interest rates, no profitability, it's hard to see the equities being good value. Citigroup, JP Morgan, Bank of America, all very similar on multiples. You could choose any one of them. They're trading a bit more than book value, give you a bit of a dividend yield, discount to the market. So, yeah, we prefer exposure there. MasterCard, we just talked about Cyber Monday. We think 5G is going to be another boost for basically electronic spending as well.
Can I ask you about energy? We've got OMV on the list here for you. There's a position you hold in the Austrian energy company. We're just getting some lines crossing the wires from the Russian energy minister, Mr. Novak, talking about this upcoming OPEC Plus meeting in Vienna. Whilst he says they haven't finalized their position, he thinks the meeting will be, quote, constructive. I guess we have to read between the lines on that one. We aim for Russia's December oil output to be fully in line with the global output deal, and there is some talk about condensates being excluded from the agreement here. But WTI has actually outperformed the S&P 500 through 2019. Surprising then perhaps that you only have OMV in that basket for energy.
Yeah, oils, we think, has got a floor at around $60 where OPEC really comes in to support the price. Saudi Arabia is going to want to support the Aramco IPO as well in there. We don't think there's an incredible amount of upside. Basically, you've seen inventories build throughout the year, despite the fact that oil prices have moved higher. It's been choppy. So we like OMV as a dividend play. The other oil companies, we have them in some portfolios where we're selling calls against them, basically. We don't think there's a ton of upside, but if you're getting a 5% dividend yield, you can get that up to a 10% yield by selling out of the money call options. So it's a sector we don't think there's a huge amount of upside, but there's some floor underneath it as well.
Just to broaden the conversation out into the broader commodity space here, I mean, we've really had the gamut this year. If you look at gold, about 13%, so somewhere between copper, which is up, I don't know, about 1 or 2%, gold 13, then oil plus 25% at this point. Any reason to be, as a Canadian, any reason to be excited about the TSX or Canadian miners this year?
Not particularly. We think with global tariffs starting to bite manufacturing and recession, we don't think there's a huge amount of upside in the materials companies. The Canadian banks, we think very expensive, trading at 2.6 times book value. We prefer that middle ground. Europe's very cheap, below book value, but no profitability. US is trading a little above book value, but they're profitable and increasing profitability. So Canada, we think housing bubble, potentially in Toronto, Vancouver. If you do see a slowdown in any commodity prices, you may see home prices go down, and that could hit the banks as well.
I just want to take the flip side to the oil story we were talking about a couple of minutes ago, and that's the airline space. So lower oil prices are certainly good for some of the airlines. We've seen that over recent years. But at the same time, we now have a space that's been targeted by customers demanding zero emissions. They might be looking to offset some of those flights by just simply not flying at all. Yeah. And EasyJet is one company here in the UK that has stepped up trying to tackle that, seeing it as a clear headline risk. What do you think lies ahead for the rest of the legacy carriers that have not closed the gap and moved towards net zero emissions?
Yeah, we don't think airlines are a good investment. They're a good trade. And we do own IAG in a number of portfolios. We added that in August, and it was yielding 10% at the time, trading at 6 times earnings. So it's probably down to a 7.5% dividend yield right now because the share price has gone up. But you want to buy them when basically there's peak pessimism and they're being priced for disaster, and it's still not as cheap as it was in August, but still represents very good value. We don't think long term you're going to get any reasonable returns on capital employed, but short term you can pick them up at good discounts.
Do you think investors are discounting the space because of the climate change story, or is it purely about supply demand, global economies, and how well they're performing on the demand story?
I think it's a combination of all those things. It's probably still relatively fragmented, and if you can be a robust operator really focusing on keeping costs in control, you can generate profitability, and then you hope you get acquired by one of the larger airlines, I think is the end game for some of the smaller companies. And I think that's pushed up prices of EasyJet, companies like that. You saw British Airways buy Europa Air recently. It's consolidation makes a lot of sense, and you want to get away from the bigger companies that are doing the acquiring, because usually they're paying too high a price historically.
In Europe, it's a difficult place, isn't it? Because we've had all this industrial action. Lufthansa in particular has been dogged, although I think the catering staff have cancelled the latest strike that was set for December here. But I mean, this theme of rising salaries, crimping margin and profitability in Europe, to what extent is that going to matter as we run into next year?
It matters, and I think that's something that might be an omen for what's the whole world's facing, basically. As you have populist governments, if they do lean left, you're going to have more wage power and less efficiency and productivity from employers. So it's something that I think symptomatic. You've demonstrated the case for airlines. I think all industrial industries basically may be facing that as well going forward. And I think profit margins are peak right now, record highs in the S&P 500, near records in Europe, and that's a potential headwind for corporate profitability.
Patrick, it's been a pleasure. Thank you very much for your time this morning. Patrick Armstrong, CIO of Plurimi Investment Managers. That is Squawk Box. We wrap up the show here, but bear in mind we have extensive coverage throughout the day on the NATO 70th anniversary. For now, goodbye.
We followed Steph Curry and Under Armour from Hong Kong to Taipei to tell this.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
Every day it's a little harder.
Disney's Frozen 2.
Anna,
Elsa,
Kristoff,
Sven. The worldwide phenomenon has returned, captivating critics everywhere.
I believe in you, Elsa, more than anyone or anything.
With big laughs and even bigger songs. Disney's Frozen 2 in cinemas now.
I'll bring the snacks!
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's Liz Hernandez with your TuneIn Music News Update. TMZ claims Fergie and Josh Duhamel have finalized their divorce and agreed that neither will pay child support. They have agreed to share joint legal and physical custody of their son. Meanwhile, Justin Bieber's wife, Hailey, is not pregnant. She posted, "The internet is funny. No, I'm not pregnant. I just really love food." To hear music from Justin Bieber and Fergie, search today's hits on TuneIn.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Along the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Hit a shot.
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
On the Giblet podcast, The Pitch, Josh Muccio follows real entrepreneurs as they pitch to real investors for real money. On a new pod club, the host shares some of the podcasts he really loves.
I think my favorite part is getting to talk with listeners of the show and hearing from our listeners crazy experiences they're having building their business is just so fun. It feels like the show itself is just the tip of the iceberg.
Go to podcasts on TuneIn to see Josh's Pod Club picks.
Good morning and welcome to Straight Signs. I'm Shimona Versace.
And I'm Juliana Tattlebaum. These are your headlines.
French luxury shares lose their sparkle after the U.S. threatens 100% tariffs on goods like champagne, handbags, and cheese in response to France's digital services tax.
Basic forces underperform as President Trump restores tariffs on steel and aluminium imports from Brazil and Argentina.
The US leader touches down in the UK to mark the 70th anniversary of NATO as tensions continue to divide the alliance. Secretary General Jens Stoltenberg tells CNBC member states must stand together.
I'm looking forward to the leaders meeting on Wednesday because when there are differences, I think it's even more important that we meet, sit down and address these issues face to face as we'll do on Wednesday.
And UniCredit's overhaul gets a warm welcome from investors as Italy's largest lender puts 8,000 jobs and 500 branches on the chopping block.
Well, a very warm welcome to Street Signs. As you can see right behind me, European luxury stocks are under pressure following a double tariff threat from the United States. Washington is mulling levies of up to 100% on $2.4 billion worth of French goods, and that includes handbags, cheese, and champagne. Now, the move comes in response to France's new digital service tax announced in the summer, targeting U.S. tech giants. The U.S. also says it may raise tariffs on a variety of European goods after the World Trade Organization rejected claims by the EU that it no longer provides subsidies to Airbus. The WTO found that plane makers A380 and A350 jets continue to be held by previous European government loans. Charlotte is at the U.S. ambassador's residence in London, where U.S. President Donald Trump will meet his French counterpart Emmanuel Macron today. What a day for the two leaders to be meeting. Indeed, it's a perfect storm when it comes to the tariffs. We were talking yesterday about the possibility of the U.S. retaliating on back of the digital tax. They're moving in that direction. And then the latest developments as well point to potential extra tariffs when it comes to the WTO too. So how are you expecting the meeting between the two leaders to go later?
Well, look, they were meant to meet to talk about NATO following those comments from Emmanuel Macron calling NATO brain dead. And of course, you could say that the two men, in a sense, agree that NATO, as it exists, cannot carry on, that it needs to evolve, that it needs to find a new political leadership. They might have different views on the solutions to this, but they both agree on the fact that NATO, as it is today, needs to change. But now, as you say, trade war and trade talks are never far when it comes to President Trump. And in the past 24 hours, you had these two announcements from the American Trade Department. First, following a WTO ruling, as you mentioned, saying that European countries are still failing to cut on some of these distortions following some illegal subsidies to Airbus. And so the US Trade Department came out saying they were thinking of putting some extra tariffs on some European goods. You remember that in October, the US already imposed some tariffs on European products are following a WTO green light, saying they could recoup some of this money that they failed to make because of these illegal subsidies to Airbus. And French wine, for example, was taxed at 25% tariff, but some goods escaped, like leather goods didn't get impacted, or champagne. But yesterday, the U.S. Trade Department announced a potential tariff where champagne is on the list, also leather goods. That's why you see some of the French stocks here, like LVMH, slightly hit this morning. And that was following the investigation by the Trade Department that started in July, when the French Parliament voted a digital tax of 3% of companies that make 750 million euros in global revenue, and 25 million of those in France. And that was following President Macron trying to come to a European consensus when it came to a digital tax in Europe. That failed, so France decided to go its own way and voted it in France in July. That's when the US Trade Department started an investigation and held some hearings with spokespeople from Facebook, Amazon, and Google. To discuss whether this was an unfair limit to trade. And so they came up with their conclusions yesterday to put out this list where champagne and leather goods are on the list. Now, you remember that in Biarritz at the G7 countries agreed to put the OECD in charge of coming up with a global scheme for a global trade, a global digital tax. And President Trump was on board with this. Now there was a truce of 90 days. The OECD is meant to come up with their proposal in 2020. In January, there's a first meeting where they will put up their conclusions. And this is when President Trump will decide if and when he imposes these tariffs that have been proposed yesterday by the Trade Department. He will decide whether the progress is good enough and whether the proposal on the table by the OECD is good enough. You remember, of course, keeping in mind that President Trump is on electoral mode, and trade talks and trade wars is very much part of his rhetoric. So we'll have to keep an eye. Definitely all this will be on the table at the meeting here at the US ambassador's residence just behind me, where President Macron and President Trump are meeting at 2 p.m. this afternoon in London time.
Charlotte, thank you so much for bringing us up to speed and painting the picture for us as we head into that meeting. Well, moving on, the U.S. manufacturing sector has contracted for a fourth straight month. The November ISM print came in lower than expected at 48.1 versus an expected 49.4. Trade war ambiguity and recession fears have fueled the months-long contraction in the U.S. factory activity. President Trump has admitted legislation backing Hong Kong protesters makes trade negotiations with China more difficult. Beijing has blocked U.S. military ships and aircraft from visiting Hong Kong in response to the move, while the Global Times says it will soon release the unreliable entities list, imposing sanctions on those that harm Chinese interests. President Trump says Beijing still wants to make a deal despite the retaliatory measures.
The Chinese are always negotiating. I'm very happy where we are, and frankly, I could be other places that I could do all by myself and be even happier. And you understand what that means. But the Chinese want to make a deal. We'll see what happens.
Now, U.S. Commerce Secretary Wilbur Ross poured cold water on President Trump's optimistic tone. Speaking to Fox News, Ross made clear that the administration will move ahead with tariffs on China on December 15th, the deadline, if nothing material happens between now and then. He went further by calling it a good time to impose duties because Chinese retailers have already stocked up for the holiday season.
And sticking with tariff news, President Trump has slapped tariffs on Brazilian and Argentinian steel and aluminum imports. In a tweet, Trump said the decision is in response to what he calls massive devaluation of their currencies. He added the measures would be effective immediately. Officials from both South American countries were left wrong-footed by the announcement and say they will contact Washington for discussions. Now, Trump said the move will support America's agricultural industry.
Really discounted. If you take a look at what's happened with their currency, they've devalued their currency very substantially by 10%. Argentina also. And I gave them a big break on tariffs, but now I'm taking that break off because it's very unfair to our manufacturers and very unfair to our farmers. Our steel companies will be very happy and our farmers will be very happy.
Well, let's take a look at how some of those steel companies and miners are faring this morning. You can see it is a picture of red out there, mostly the UK companies. One of the reasons why the FTSE 100 is lagging today. Names like Antofagasta down about 1.5%, BHP down almost 2%, Fresnillo a tad more than that. So definitely not taking it that well as some of the big mining names and steel makers in the UK and also in Europe as well. I want to bring in Paul Rankin, a mining analyst from VSA Capital, who joins us around the desk. The reason, the rationale for the U.S. president deciding to impose tariffs yet again on Brazilian and Argentinian steel and aluminium tariffs ostensibly was on national security concerns and also because they have, quote, actively currency devalued. Just to bring it back to the United States steelmakers, is this actually going to be a positive step for them? If you look at some of the big names like Alcoa, U.S. Steel, those names are down like 40% year to date. Will this make a difference, the steps that the U.S. administration has announced overnight?
It will be a small contributor, I think. What it does is it gives a little bit of relief, I think, from the dramatic currency devaluation of both Brazil's and Argentina's imports, but as far as steel and aluminium. But their contribution as far as the overall size of the marketplace as far as the U.S. is concerned would be relatively small, so it would be very minor, I think.
But it's not as simple as that, is it? It's a lot more complex because there are intermediate goods as well to be taken into consideration. And I was reading in the Wall Street Journal overnight that Brazil account for 2/3 of the imported steel slab that come in to the United States. So by imposing these tariffs, you're indirectly also harming the local industries that rely on those intermediate goods.
That is correct, because there is always some kind of knock-on effects with different subsectors of industry, not just the primary players in steel fabrications.
Now, I think it's important to put this into the context as well in terms of what Argentina and Brazil export beyond steel and aluminium. And when we think about soybeans and other ag products and the fact that Argentina in particular has just strengthened their relationship with China. So in terms of tallying out, reconciling the impact of these steel and aluminium tariffs with the benefit that they're getting from strengthening their ties with China in other areas, how does this, net affect these two countries?
Well, these two countries, as you say, the Chinese will fall upon or come to those two countries in the event that they have trade issues with trying to source agricultural products, particularly soybeans, from the United States, because these are the direct competitors to the United States in grains, in particular soybeans. And as he had also tweeted here, is that he is giving them that specific deadline of December 15th for the first part of a trade deal, and that first part of a trade deal was supposed to be about agricultural goods in particular. So it's all about the gamesmanship here on global trade.
And bringing it back to the corporates, Jumana mentioned the U.S., the major players in the U.S. market. We're seeing a fairly strong reaction in the European miners today. Does that make sense to you? And what are the European names to be looking out for here in terms of the impact of this announcement?
Frankly, I think it's an overreaction as far as the European names because we are dealing with the primary producers, and these are the raw material players which are listed here as with the Rio Tintos and the BHPs and so forth. And they don't have mines in those particular countries to any great extent. They do some trading of those raw materials, particularly Glencore does. But but from the aspects otherwise from that, it's more fear than substance.
Right. But what about the outlook for the steel industry as a whole? And you could point to the industrial slump that's faced the world over the last couple of months on back of the trade war and tariffs certainly biting the manufacturing industry everywhere. That has led to somewhat of a glut in demand. But what about the supply side? What are you seeing there?
There's plenty of supply out in the marketplace throughout the value chain. The Chinese are in a gradual slowdown here. They're trying to disincentivize essentially real estate speculation and development in the short term in China. So from that standpoint, it's a weak market overall globally. The trade difficulties with the United States are simply causing the Chinese producers, in order to try to place their excess inventories elsewhere into other places like Europe, so that just impacts domestic players in those situations.
And just bringing it back to the geopolitical situation here and the fact that we have seen this relationship between China and these LATAM countries accelerate recently. I mean, how do you see this getting resolved? How do you see this dynamic evolving? Are we going to see Argentina and Brazil just continue to go down the path of strengthening ties with China? Or do you think that we're going to see a resolution between the U.S. and these countries?
These countries are all interdependent with both the United States and China as far as their trade is concerned. They have to come to some kind of a détente, I guess is the best word to put it, of dealing with both sides in order to reach some kind of a compromise that works for all parties.
All right. Well, thank you very much for weighing in this morning. An overreaction in the stocks we're seeing in Europe, the sell-off. Interesting view there. So one to keep an eye out for investors out there. Potential opportunity to get into these mining names today. That's Paul Rankin, mining analyst from VSA Capital.
Juliana, let's actually take a broader look at how markets are faring. And as you mentioned, the handover from Wall Street was pretty negative last night. A perfect storm when it comes to tariff announcements, not least because of the announcements with respect to steel and aluminium tariffs on Brazil and Argentina came as somewhat of a surprise for those markets yesterday. And then we had further news and reports overnight that the USTR are also considering tariffs on French goods on back of the digital tax. And another one as well in response to the WTO ruling that the EU's claim that they are no longer providing subsidies for Airbus has been rejected. So on the back of that, the US are also considering further tariffs on Europe. So lots and lots of tariffs to consider overnight. One of the reasons why Wall Street did trade so much in negative territory. Bit of a mixed session for Asia. But surprisingly today, we've actually got the Stock 600 trading up. Firmer on the day, up around 0.4 percentage point. Bit of a shaky start to the month yesterday, but today we are seeing some green on the board. So let's break it down by individual markets. And this is the picture behind me. FTSE 100 is the only index trading in the red today, down about 0.5 percentage points or 35 points lower on the session. Miners, we were just talking about some big movers there. Antofagasta, Glencore, some of those names down about 2%. Our guest on the show was just saying that he thinks the reaction there is a bit of an overreaction, given that none of those countries, or the very few of them, have actual exposure to Latin America. Also worth bearing in mind that Moody's has now downgraded UK banks from stable to negative. So some of the banks in the UK are names that we're looking at. 72.50 is where we're at. Xetra DAX up about 0.2 percentage point. So we are inching higher this morning. Remember, yesterday we were gripped by the German political developments. Today we're very much focused on the industrial complex as well. But all eyes on the CAC 40 because France seems to be right in the firing line today with the proposals out of the US on those $2.4 billion of French goods potentially could be tariffs as soon as January. So we've been looking at some of the names in the French index that could be impacted, mostly luxury names and some of the food names as well. We'll talk about that in a moment. And then FTSE MIB in Italy also up about 1%. So let's talk about the sectors. On back of this very tariff-heavy day, we've got basic resources right at the bottom, as I mentioned. Some of the miners, steel makers getting hit in Europe and in the UK. Household goods, so luxury, down about 0.2 percentage point as well. And here, it's not just the tariff story, but also exposure to Hong Kong. This is a theme that has come up time and time again. We've got names like LVMH carrying down about 1.5 percentage points today. This after President Trump said that it may get a little bit trickier to reach a trade deal after passing that legislation from the Senate in support of the Hong Kong demonstrators. So something to keep an eye on there as well. Oil and gas down about 0.2 percentage point. The global climate not very positive, but do remember that we have OPEC coming up, and there is expectation that some of those production cuts could be extended, if not increased, for another 3 months. And up at the top today, we've got tech stocks up 1.1%. Not much of an impact on chip makers today. Food and beverage also up about 0.7 percentage point as well. Worth mentioning that one of the big names that we've been watching is Danone in France. And what's interesting about that company is that even though, of course, you would expect them to be in the line of fire with the proposed new tariffs, a lot of their production is actually made onshore in the U.S. So Danone is a name that is actually trading up positive today in the food and beverage space. Juliana.
Thank you very much, Jemana. We're going to take a quick break now, but coming up on Street Signs, will President Trump ruffle a few feathers at the NATO meeting in London? We're live from Buckingham Palace next.
The moth, without hope, struggles in the spider's web.
Dua Lipa. See her live across the UK in May and June with Priority. If you're on O2, get Priority tickets up to 48 hours before general release from tomorrow. Search for Priority.
I'll tell you why.
Dua Lipa. Live across the UK in May and June. Unforgettable live music experiences with O2. O2. Breathe it all in. Terms apply.
Hey, turn it down. Now play the big hit. That's better. Get our lowest ever price on these Bose QC35 wireless headphones. With noise cancellation and voice control in the Black Tag event at Curry's PC World. Or get £50 off Bose SoundLink on-ear wireless headphones. Either way, you get 6 months free Spotify in the Black Tag event at Curry's PC World. T's and C's apply.
NFL fans, hear every live game on TuneIn Premium.
Running down the sidelines and running in for the touchdown. And it is good!
This Thursday, hear the home and away call as the Dallas Cowboys visit the Chicago Bears at 8:20 p.m. Eastern.
It's a block, easy touchdown, a walk-in touchdown. The third time's a charm.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Welcome back to Street Signs. Well, President Trump is here for a highly anticipated NATO meeting, marking 70 years since the alliance's creation. The gathering comes amid deep divisions among leaders regarding spending pledges, Syria, and the relevance of NATO itself. The U.S. president will have a number of meetings with European leaders, including French President Emmanuel Macron and German Chancellor Angela Merkel. President Trump will end the day at a NATO leaders reception at Buckingham Palace, where our very own Willem Marks is standing by. Willem, a number of issues certainly on the table here. What should we be looking out for in terms of today's meeting? What's going to be the most contentious issue of the day?
Well, that will likely be up to President Trump and what he decides to say if he does speak publicly, or tweet if he decides to do that as well, because, of course, it's always been his messaging around NATO that's been most closely watched by other members. For years now, he's criticized the alliance members for not spending enough on defense. By convention, all members should be spending 2% of their GDP on defense, and that hasn't always been the case. When he came into office, there was just a handful of countries that, like the US, did that. Now there's far more, and he's tried to claim credit for that in comments to White House reporters yesterday before he flew over here on Air Force One.
It has not been a fair situation for us because we pay far too much. As you know, Secretary Stoltenberg said that we were responsible. I was responsible for getting over $130 billion extra from other countries that we protect that weren't paying. They were delinquent. So we'll be talking about that. We'll be talking about a lot of things.
And as NATO marks its 70th anniversary, he's correct in saying that countries together are spending around $130 billion more on defense than was the case when he entered the White House. But a lot of those increases were already pre-planned by many NATO members because of efforts by people like Russia in places like Crimea. In terms of the other contentious issues around the military alliance, you've got, of course, the Turkish incursion into northern Syria that was given the green light by President Trump, and also the US decision to pull out of a long-standing nuclear treaty with Russia that's caused a huge amount of concern amongst members of NATO, specifically those closer geographically to Russia. There's big questions about how Eastern Europe is going to be protected as part of NATO going into the future. And of course, spending will be very key from President Trump's perspective as to how far the US decides to go on that front.
Willem, there's one person conspicuously absent from having a one-on-one bilateral meeting with President Trump, and that is our very own Prime Minister Boris Johnson. What is going on here, and why is the Prime Minister seemingly distancing himself this time around from associating too closely with the U.S. President?
So this summit, to celebrate the 70th anniversary, we've got national flags all the way down the mall here in front of Buckingham Palace, was scheduled a couple of years ago by Boris Johnson's predecessor, Theresa May. Little would she have known, little would anyone in the government at the time have known, that there would be a general election in the UK in December. But that's exactly what's happening because of Boris Johnson's decision to call one to try and get a Brexit deal passed through a new parliament. What that's meant in a country where the Trump brand is politically quite toxic is that ahead of that general election on December 12th, it seems very unlikely that Boris Johnson as Prime Minister wants to be photographed or caught on camera at all meeting with the US President. The attack line from his major opponent, Jeremy Corbyn, over the last couple of weeks is often focused on the possibility that a British government led by Johnson and his Conservatives would be prepared to negotiate access with the US for drug companies, in particular, to the National Health Service. It's an attack line that polling indicates has proven very successful as a criticism of the Johnson Conservative Party, and that may be one of the reasons that his advisors and the Prime Minister himself are less than keen to be seen shaking hands with the US leader just 9 days ahead of that election.
And I'm sure many of our viewers will also remember that Jeremy Corbyn has in the past referred to Boris Johnson as Donald Trump's poodle. So indeed, playing into that, resisting the opportunity to actually have a one-on-one meeting with him. I just want to take you to a different tact. And obviously, we do have NATO coming up. And we're just seeing a live shot now of President Trump meeting with the January Secretary Jens Stoltenberg. Let's take a listen.
I understand is very, to me, very important. Okay, thank you very much, everybody.
Mr. President, you're here in London. Are you going to be seeing Prime Minister Johnson, and do you have any thoughts on the upcoming election?
I have no thoughts on it. It's going to be a very important election for this great country, but I have no thoughts on it. I will be meeting with him, yes.
When will that be?
I don't know. I have the schedule over here. I have many meetings. I have meetings set up with lots of different countries.
What's President Macron's criticism about NATO, saying that it is brain dead?
Who said that?
President Macron.
I know, and then Turkey responded by saying that he was brain dead, which is interesting. Now, NATO serves a great purpose. It got to be unfair for the United States because the United States was paying a disproportionate amount. And I heard that President Macron said NATO is brain dead. I think that's very insulting to a lot of different forces, including a man that does a very good job at running NATO. Now, it has a great purpose, especially with the fact that NATO is becoming much more flexible in terms of what it looks at. But I was very surprised. I'd like to ask you, what did you think? He made a statement about NATO being brain dead. What did you think?
Well, that's not the case, because actually NATO is active, NATO is agile, NATO is adapting, and we have just implemented the largest reinforcement of our collective defense since the end of the Cold War, with high readiness of our troops. For the first time in our history, we have combat-ready troops in the eastern part of the alliance. European allies and Canada are investing more, also in high-end capabilities, and we are stepping up the fight against terrorism, and we are, as an alliance, for the first time also addressing the security implications of the rise of China. So the reality is that this alliance have proven once again to be able to adapt to change, responding to a changing world. So that's the reason why we are a success, the ability to change when the world is changing.
It's a tough statement, though, when you make a statement like that. That is a very, very nasty statement to essentially 28, including them, 28 countries. I think that, you have a very high unemployment rate in France. France is not doing well economically at all. They're starting to tax other people's products, so therefore we go and tax them. It's just taking place right now on technology, and we're doing their wines and everything else. And it's a very tough statement to make when you have such difficulty in France. You look at what's happened with the yellow vests, or you look at what's going on during certain parts of their season, they've had a very rough year. And you just can't go around making statements like that about NATO. It's very disrespectful.
Mr. President, the Department of Justice Inspector General's report is due out soon, and it's been reported that the Attorney General disagrees with that conclusion. Do you agree with Attorney General Barr?
Well, I just don't know. I just don't know. I haven't seen it. I purposely stay out of it. We have a great Attorney General. He's a very fair man. He's a great gentleman. He didn't need this job. He took this job because he wanted to do something great for the country. As you know, he was a very successful man. Picked a great company to work when he left. As you know, he picked a great company to work for. But he's a very successful man. Didn't need the job. He's doing a great job. I have not seen the report. Perhaps he's read the report. I think he was quoted incorrectly. I do believe that because I'm hearing the report is very powerful, but I'm hearing that by reading lots of different things, not from inside information, it's really from outside information. I think all we have to do is wait. Isn't it going to be released on Monday or so? I think we have to read it and we have to see it. But I hear there's a lot of devastating things in that report, but we'll see what happens. Look, we have a few days to wait. We've been all waiting a long time. I do think the big report to wait for is going to be the Durham report. That's the one that people are really waiting for. And he's highly respected, and he's worked very hard, and he's worked long hours, I can tell you, and gone all over the world. So we'll see. But the Durham report is a report people are really looking forward to. But this is a very important report. The IG report is a very important report. If what I read is correct, I read it in your newspaper. If what I read is correct, that would be a little disappointing. But it was just one aspect of the report. We'll see what happens. We'll see it. It's coming out in a few days. I hear it's devastating, but we'll soon find out.
Mr. President,
Yes?
How do you plan to bring NATO together in this summit?
Well, I think the Secretary General has done a good job in bringing NATO together. It's been unfair because the United States is paying 4%, and some people could say 4.3% of the largest GDP there is in the world by far, because we've brought it to a level that nobody thought even possible. So we're paying 4 to 4.3%, when Germany's paying 1 to 1.2%, at max 1.2% of a much smaller GDP. That's not fair. And it's not fair also when you have the European Union. Many of these are the same countries, but you have the European Union treating the United States very, very unfairly on trade. The deficit for many, many years, for decades, but the deficit for many, many years has been astronomical with the United States and Europe in their favor. And I'm changing that, and I'm changing it fairly rapidly, but it's not right to be taken advantage of on NATO, and also then to be taken advantage of on trade, and that's what happens, and we can't let that happen. So we're talking to the European Union, and we're talking to various countries about NATO, but we're talking to the European Union about trade, and they have to shape up, otherwise things are going to get very tough.
But let me just add that NATO is the only place where North America and Europe meet every day, where we discuss, decide, and take actions together, responding to a wide range of different security threats and challenges. And we do that more now than we have done for many, many years. And the reality is that, not least because it has been so clearly conveyed from President Trump, that we need fair burden sharing, allies are stepping up. And we are also modernizing this alliance, responding to new challenges in cyber, in space. We will declare space as a new operational domain for NATO, something we never had before. So it just highlights that, well, there are differences because we are 29 different countries from both sides of the Atlantic with different political parties in power, with different history, different geography. But despite these differences, we have always been able to unite around our core task, to protect and defend each other, because we are stronger and safer together. And I'm absolutely certain that that will also be the case now.
I would say that nobody needs NATO more than France. You just look back over the last long period of time. Nobody needs NATO more than France. And frankly, the one that benefits really the least is the United States. We benefit the least. We're helping Europe. Europe unites and they go against a common foe. That may or may not be a foe. Can't tell you that. But there are other foes out there also. But I think nobody needs it more than France. And that's why I think that when France makes a statement like they made about NATO, it's a very dangerous statement for them to make.
You mentioned the digital tax, sir. What would it take for you not to impose those tariffs on the French products?
Well, look, I'm not in love with those companies, Facebook and Google and all of them, Twitter, although I guess I do pretty well with Twitter on the other side, but I'm not necessarily in love with those companies. But there are companies. They're American companies. I want to tax those companies. They're not going to be taxed by France. So France is going to put a tax on. It was totally out of the blue. He just had the idea. Emmanuel had an idea. Let's tax those companies. Well, they're American companies. I'm not going to let people take advantage of American companies because if anyone's going to take advantage of the American companies, it's going to be us. It's not going to be France. And so we're taxing, as you know, we're taxing their wines and everything else. And we have a very, very big tax to put on them. Plus, we have a tax going on Airbus, and that'll be a good thing for Boeing. But we're only going to do that if it's necessary. As you know, we won in the World Trade Organization. We won $7.5 billion. We never used to win before me because before me, the United States was a sucker for all of these different organizations. And now they realize, the World Trade Organization realizes that my attitude on them, if they don't treat us fairly, well, I'll tell you someday what will happen. And we've been winning a lot of cases at the World Trade Organization. We virtually, very rarely did we ever win a case. They took advantage of the United States. So that's where it is. We won $7.5 billion. And if France puts a tax on our companies, again, these are companies that are against, they were against me. If I read the papers correctly, I don't know why they were against me, but they were against me. They're supposed to be very powerful, and yet I won. So maybe they're not so powerful. But they're American companies. I don't want France taxing American companies. If they're going to be taxed, it's going to be the United States will tax them. Okay?
And why are you staying out of the British election, sir? Are you making the
Because I don't want to complicate it. I can look. I've won a lot of elections for a lot of people. If you look just over the last few months, 2 elections in North Carolina I won. I helped the governor of Kentucky. I mean, the press doesn't write it, but they went up supposedly 17, 18, 19 points because of mine. He lost by just a little bit, but I lifted him 19 points. In Louisiana, I got them into a runoff, and after getting him into a runoff, he picked up 14 points because they thought he was going to lose to a popular governor, John Bell Edwards. Good guy, popular governor. He almost won. He lost by less than a point. But with the exception of those 2 races where I had a huge impact because I raised them up almost to victory and they had no chance, with the exception of those 2, I've won virtually every race that I participated in. But this is a different country. And, I say often, in Germany, they like Obama. The reason they like Obama is because Obama gave the ship away. He allowed them to take everything. He gave them things that I wouldn't do. And I love Germany. I love this country. I love a lot of countries, but I'm representing the U.S. So they may not like me because I'm representing us, and I represent us strong. President Obama did not represent us strong. He gave everything away, and he shouldn't have done that. And that's why we're still paying a price for what he did. So I'll stay out of the election. You know that I was a fan of Brexit. I called it the day before. I was opening up Turnberry the day before Brexit. You were there. Many of you were there. I mean, I recognize that many of you were there, and they asked me whether or not Brexit would happen. I said yes, and everybody smiled and they laughed. And I said, yes, it's going to happen. In my opinion, it was just my opinion. The next day they had the election, and I was right. But I stay out of it. I think Boris is very capable, and I think he'll do a good job.
How is your relationship with President Macron going into this meeting?
I think it's fine. I've always had a good relationship with Emmanuel. But sometimes he'll say things that he shouldn't say, and I disagree with some of his policies with respect to France, but he's got to do what he's got to do. But sometimes I think he does things that are counterproductive for his own country.
Mr. President,
Prime Minister Corbyn, or is that beyond?
Say it.
Would you be able to work with a possible Prime Minister Corbyn, or is that?
I can work with anybody. I'm a very easy person to work with. You know, you wouldn't believe it. Look at this gentleman. When I came in, I was angry at NATO, and now I raised $130 billion. And by the way, you're talking annually. You know, you're talking about a tremendous amount of money. You're talking about numbers that are astronomical, and yet you still have many delinquent. You know, I call them delinquent when they're not paid up in full. And then I ask the other question: when they don't pay up in full, what happens to the past year? So let's say Germany's at 1%, and they stay at 1%, and another one. Well, does that mean it disappears for the last 5 years? What they haven't paid? You know, nobody's ever asked that question. It's not a bad question for you to be asking. Because, you know, it's not like, oh, gee, let's start a brand new year. A lot of countries haven't paid, and you could make the case that they haven't paid. They're really delinquent for 25, 30 years. And then you add all that up, and NATO is a very rich system. You know that, right? So, you know, they haven't chosen to go that way. But when Germany's at 1 to 1.2%, and when they don't pay, up to the 2. And let me tell you, the 2 is a very low number. You know, it really should be 4. It shouldn't be 2, it should be 4. But that's the way it is, yeah.
Mr. President, are you concerned at all that the impeachment inquiry back home, Congress is preparing to impeach you, that it weakens your position as the president?
I don't think so. You know, I know most of the leaders. I get along with them. It's a hoax. The impeachment thing is a hoax. It's turned out to be a hoax. It's done for purely political gain. They're going to see whether or not they can do something in 2020, because otherwise they're going to lose. It's turning out, and you see it better than anybody. I read something in your paper the other day that it's having a reverse effect, which some people thought it might have. I didn't know. But I can tell you that districts where I won, and then they had an election in between mine, but they had an election and other people got in, Democrats got in, those districts are leaning very big toward me. Now, I wasn't in the race in 2018, so it's not really the same thing. And a lot of my voters say they're not going to vote unless Trump is actually in the race. But it's really having a tremendous impact on, and a lot of Democrats I hear are very upset. They just got back from their district, and I hear they're very upset. The impeachment witch hunt, it's really just a continuation of the hoax that's been taking place for the last 3 years, and I think you know that.
And does it cast a cloud, though, as you're trying to negotiate?
Well, I would say this. I think it's very unpatriotic of the Democrats to put on a performance where they do that. I do. I think it's a bad thing for our country. Impeachment wasn't supposed to be used that way. All you have to do is read the transcripts. You'll see there was absolutely nothing done wrong. They had legal scholars looking at the transcripts the other day, and they say these are absolutely perfect. Trump is right when he uses the word perfect. Those concepts, those calls that we made, 2 of them were absolutely perfect calls. And I think it's a very bad thing for our country. Does it cast a cloud? Well, if it does, then the Democrats have done a very great disservice to the country, which they have. They've wasted a lot of time. We're trying to get prescription drugs reduced very substantially. We could do it easily. They don't have any time to do anything. I call them the do-nothing Democrats. They are hurting our country very badly.
Mr. President, will you meet with President Erdogan here? And is there still?
I may. I have a very good relationship. I may. It could be. I don't know if it's on the schedule, but if it isn't, I would.
And is there still a place for Turkey in NATO after its invasion of Syria a couple weeks ago?
Well, I'd have to ask the other countries. I mean, I have my own views, but I wouldn't say it here. Good relationship with Turkey. We left their border. We've been on their border long enough. They're doing just fine on their border. We kept the oil. I kept the oil. The only people we have over there now, we have a small group that are fighting the remnants of ISIS because they pop up again and we put them down. We've defeated the ISIS caliphate. Nobody thought we could do that so quickly. I did it very quickly. When I came in, it was virtually 100%, and I knocked it down to 0. But it pops up every once in a while. So we have a very small group there, and we're doing it with others, in all fairness. But importantly, we kept the oil. And the oil is what fueled ISIS. That's what fueled them. That's what gave them the economic strength to do what they did. And of course, we killed al-Baghdadi, and we also killed his second. So that was very important because he was trying to reform ISIS.
Mr. President, should the National Health Service be on the table in trade talks with the United Kingdom?
Say it?
Should the National Health Service be on the table in trade talks?
No, not at all. I have nothing to do with it. Never even thought about it. Honestly, we have enough. Look, we are going to have a great healthcare system. We're doing great healthcare work. We've got things really running well. And if we get elected, if we take the House, keep the Senate, keep the White House, we'll have phenomenal healthcare. But right now, we've made it very good. And we have 180 million people on plans that they absolutely love, private plans that they absolutely love. But in this country, no, they have to work that out for themselves. We have absolutely, I don't even know where that rumor started. We have absolutely nothing to do with it. And we wouldn't want to. If you handed it to us on a silver platter, we want nothing to do with it.
There's some talk among lawmakers of censuring you instead of impeachment. What do you think about that?
Unacceptable. I did nothing wrong. I heard about it. Now they want to go to censure because they have no case for impeachment. So they want to go to censure. I don't want them to go to censure. I did nothing wrong. I don't mind being censured if you do something wrong. I did nothing wrong. I had a great conversation, very respectful conversation with the president, a good person, by the way, with the president of Ukraine. It was flawless. People have analyzed it from 15 different ways. It was flawless. You know, there were many people on that line, including the Secretary of State. And one person, two people had a complaint, and you take a look at those two people and you tell me. But many people, and I know there were many people on the line. I mean, there's always a lot of people. When you speak to a head of state, not only our people, they had people also, many people probably. I wouldn't be happy with that at all. No, that's to me, it's unacceptable. I did nothing wrong. You don't censure somebody when they did nothing wrong. They're in search of a crime. That's what they are. They're what you call an investigation in search of a crime. There was not only wasn't there a crime, it's not even a word that should be used. I had a very, very good conversation with the head of Ukraine. And by the way, yesterday he came out again and reaffirmed again that we had a very, very respectful, good conversation, that President Trump did nothing wrong. He doesn't even really understand what's going on over here. They look at us like, is this country crazy? The Democrats have gone nuts. They're crazy. And it's very bad for our country.
Do you see a greater divide between the U.S. and Europe now in NATO?
Say it?
Do you see a greater divide in NATO between the U.S. and the rest?
No, not with us, but I do see France breaking off. I'm looking at him and I'm saying, you know, he needs protection more than anybody, and I see him breaking off, so I'm a little surprised at that.
How sure will you convince the
ally or a dependable member of NATO, and when will you bring sanctions against them?
But the first part of your question, say it again.
Thank you. Is Turkey a dependable member of NATO, and when will you bring sanctions against them for buying Russian S-400 missiles?
Well, it's a country that I happen to have a good relationship with. We did a deal that everybody was very critical of, and now they're saying it works. I read a couple of stories just 2 days ago that, wow, that deal that Trump did with Turkey, because I want to get our soldiers out of there. I don't want to be policing a border that's been fought over for 2,000 years. I want to get them out. But I wanted to keep the oil. And now they're saying that was a great deal that Trump made. Took a lot of heat over that deal. No, I think that as far as I'm concerned, I like Turkey, and I get along very well with the president. And I would hope that he's a very good member of NATO, or will be. But we'll see what it is in the future. Could I ask you that question?
Yes, but Turkey is an important NATO ally. And you can just look at the map. Bordering Iraq and Syria, the only ally that borders that part of the world. And Turkey has been enormously important in our joint efforts to fight ISIS, Daesh. We have been able to liberate in the US-led coalition to defeat ISIS all the territory that ISIS controlled just a few months ago, and more than 8 million people that were under ISIS control. And we have done that not least by using infrastructure bases in Turkey. So in the fight against ISIS, Turkey has played a key role. Then many allies have expressed their concern about the Turkish military operation into northeast Syria. But following the agreement between the United States and Turkey, when Vice President Pence went to Ankara, We have seen that Turkey has stalled its military operations in northeast Syria, and we have seen a significant reduction in violence. And now we have to build on that and try to find a political solution to the crisis in Syria. Let me also add on the question about Europe and North America. Yes, there are differences, as there has always been, dating back to the Suez Crisis in '56 all the way to the Iraq War in 2003. So it's nothing new that 29 allies have different views on many different things, trade, climate change and other things. But again, the strength of NATO is that despite these differences, we have proven again and again able to unite around our core task to protect and defend each other. And that's exactly what we are doing now. We are doing more together, North America and Europe, than we have done for many decades. So the paradox is that despite so much, some political differences, we always are able to agree and unite around our core task to stay together.
And I will say this, 3 weeks ago when we got al-Baghdadi, Turkey was very helpful. We flew over areas that were totally controlled by Turkey and the Turkish military. We said we're coming. They absolutely were very supportive, actually. We didn't tell them what we were doing and where we were going. Turkey could not have been nicer, could not have been more supportive. And that's important. And I wanted to say that in keeping the oil, ISIS was trying to, as you know, regain control of the oil. And we have total control of the oil. And frankly, we had a lot of support from a lot of different people. But right now, the only soldiers we have essentially in that area are the soldiers keeping the oil. So we have the oil. And we can do with the oil what we want.
But Turkey bought Russian missiles. How is that being on the side?
Well, they did, and they tried to buy ours, and the Obama administration said you can't have them.
What did you get them to?
The Obama administration said you can't have the Patriots. You can't. We're not going to sell them to you. And they said that a number of times, and then Turkey went out and bought the Russian missile. So we'll see what happens. We're still talking about it. But they wanted to buy the Patriots. They tried to buy the Patriots. I think most of you know that. And they were shut off from buying the Patriots. They were not allowed to buy it. So that puts him in a bind also.
But the Russian system will not be integrated into the integrated NATO air and missile defense systems, because these Russian systems cannot work together with the rest of the NATO systems, of course. I welcome the fact that there are talks going on between the United States and Turkey looking into some alternative systems, Patriots, and also the fact that NATO actually augments, we augment the Turkish air and missile defense system today with the deployment of Patriot batteries by NATO in Turkey. So we address this issue and we try to find a way to solve it, because it's now creating some problems internally in the alliance.
And as you know, Turkey bought billions and billions. It was one of the largest orders of F-35s, which is the greatest fighter jet in the world. And all they're going to do now is go to another country, whether it's Russia or China. They don't want to do that. They want to buy the best plane. But, you know, they're making it very difficult in a way themselves, but they're also making it difficult in Washington for them to buy that plane. But they want to buy it. They have a very big order out. They've already put up billions of dollars. They've given it to Lockheed Martin.
Mr. President, you said earlier that
you'll have council president future impeachment hearings.
Say it?
Have you made the decision as to whether you'll have White House council president future impeachment?
I'm not even thinking about it. I'm only thinking about this. The impeachment hoax is going nowhere. We have tremendous support. In the history of the Republican Party, there has not been this support. We have 196 to nothing in terms of votes in the Congress, and as far as I'm concerned, I hear the Senate is angry about it. The Republican senators are very angry about what's going on because they hurt our country. They're hurting our country, the other side, very badly. We have tremendous support, probably the most united that our party's ever been. I just had a 95% approval rating. It's the highest in the history of the Republican Party. Ronald Reagan was 87. He's second. The party has never been this united, the Republican Party. The impeachment is going nowhere. It is a waste of time. They're wasting their time, and it's a disgrace. It's a disgrace to our country.
How will you convince Republican senators to agree that your conduct with Ukraine was perfect and flawless? Because a number of them, as you know, have been critical of your conduct.
Well, that's only the only people that are critical are people that haven't read the conversation that I had, and in some cases they haven't read. Are you okay back there? What happened? You getting into a fist fight or something?
What do you think you should have said?
No. I thought you had something. Okay, I thought they got into a little fist fight back there. That's happened a couple of times with you people. No, I think the Republican Party is right now more united than they've ever been. When people read I always say read the transcript. I also say take a look at what the president of Ukraine said. And he said it numerous times, including very powerfully yesterday. Because that's the only thing that really, that's it. Then you have people heard third hand, fourth hand, second hand. No, we have tremendous support in the Republican Party. There never has been support like this. In fact, I would always complain that the Democrats, I think, are lousy politicians with horrible policy. Open borders, sanctuary cities, high taxes. They want to raise your taxes. But they've always stuck together. I respect that. And the Republicans, I've always said, have better policy, but historically they haven't stuck together the same way. There has never been a time where the Republican Party has been more united. This is a witch hunt by the Democrats. It's a continuation. It's been going on now for 3 years. Actually, from before the election, it's been going on. You'll probably see that after the report is released on Monday or Tuesday. But this is just a witch hunt that's very bad for our country. But I'll tell you, it's been very unifying for the Republicans and for my base.
A point of clarification. In your opening remarks, you were very critical of one country, but you didn't name the country. What country were you talking about?
I'd rather have you guess. You're a very good reporter. I'd rather have you guess.
Mr. President,
I'll probably agree with your assumption.
Mr. President, would you like to see Secretary Pompeo run for Senate in Kansas?
So he's a tremendous guy doing a tremendous job. And I would say this, if I thought we were going to lose that seat, because we shouldn't lose that seat, it's a great state. It's a state that I won overwhelmingly, as you know. We shouldn't lose that state.
The ongoing press conference between President Trump and the Secretary General of NATO, Jens Stoltenberg, covering an array of different topics. But I just want to point out one of them right at the beginning. President Trump wasted no time in saying that Macron's comments with regards to NATO being brain dead is very insulting. So definitely a lot to unpack as this press conference continues. We'll be handing over to Worldwide Exchange for more. I'm Jemana Versace.
I'm Juliana Tattlebaum. Worldwide Exchange up next.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1.
It's Liz Hernandez with your TuneIn Music News Update. Camila Cabello tells Elle Magazine that she mostly stays away from social media. She says, honestly, I'm like never on social media. I think I have a better, wiser perspective on things because I'm older and I understand myself a lot more. I feel far more grown up growing up. Meanwhile, her boyfriend Shawn Mendes had to cancel a show in Brazil on Saturday due to laryngitis. To hear more music from Camila Cabello and Shawn Mendes, search today's hits on TuneIn.
Along the goal line, Martin scores and tucks it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
And a move, and a shot, they stop!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
It's Liz Hernandez with your TuneIn Music News Update. Chris Young performed at the Macy's Thanksgiving Day Parade and then shot out of town so fast that he was able to help cook and eat turkey with his family that night. There's 2 separate photos, one of him on the parade float and then another picture of him wearing oven mitts and holding the cooked turkey. To hear more music from Chris Young, search Country Roads on TuneIn.
I gotta give props to the radio, 'cause if you know me, I was raised on country.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Kicking off December in the red, stocks will try today to bounce back from their worst day in 2 months. The tariff ban is back. President Trump reigniting a trade war with one of our closest allies. It's not China. This as President descends on Europe for the 70th anniversary of the NATO alliance. We just heard comments from him, and we will bring them to you. New warnings from China that could seriously derail any progress on trade and call it the most intriguing OPEC meeting in years. We'll speak with the executive director of the IEA on what you can expect as worldwide exchange begins. Music to fire you up on this Tuesday morning. All right, good morning, good afternoon, good evening, and welcome from wherever in the world that you may be watching. I am Brian Sullivan. It is Tuesday, December 3rd. Call it NATO Day. All right, here's how your money and the global markets are setting up their day. The major averages coming off their worst day in more than 7 weeks. The Dow dropping more than 200 points on Monday, kick off the final trading month of the year and also of the decade. Things look a little bit better now. We're not regaining what we lost yesterday, but we are not in the red either. We are seeing Dow futures. They're up about 56 points right now. So at least right now, we're seeing the markets hold up. But there are new trade fears out there, potential tariffs on France, perhaps now the big market risk. We'll talk more about that in moments. In the bond market, the benchmark 10-year yield is stuck at 1.82%. All right, around the world now, particularly in Asia, the Japanese market fell a bit, cooling off, down about 0.5%. China's two main indexes, they were mixed. So we saw the Shanghai comp up, the Hang Seng down, but only fractionally. In Europe, mostly higher. Traders probably totally fixed on that President Trump news conference moments ago. We are seeing 4 of the 5 major averages higher. And let us start now with Europe. Because France, responding to President Trump's latest tariff threat. The country's finance minister saying the U.S. threat of 100% tariffs on $2.5 billion worth of imports from France is, quote, unacceptable and not what one would expect from an ally. Bruno Le Maire added that the European Union is ready to respond. Shares of leading French luxury companies, they are responding. As you can see, they are down across the board. Hermes, Kering, LVMH, and Veralia, they're all down 1.5% to nearly 2%. The threat of new tariffs on goods from anything from champagne to handbags, cheese, and wine follows a U.S. investigation into France's tax regime, which claims the country's new digital tax discriminates against American companies unfairly. The broadside against Paris comes just hours after President Trump reignited a separate trade war, this time against Argentina and Brazil. saying he is raising tariffs on steel and aluminum imports from those countries in response to what he calls a massive devaluation of their currencies. Well, all of this coming as the president is in the United Kingdom, wrapping up a meeting with the NATO Secretary General moments ago. And he is due to meet with French President Emmanuel Macron later on today. As always, we've got full team coverage right on the ground. Willem Marx is at Buckingham Palace, and Charlotte Reed is at Winfield House. That is the U.S. ambassador's residence. Willem, let us begin with you. The president covering a lot of ground in the sit-down with the Secretary General today.
That's right, Brian. He was meeting with Jens Stoltenberg just a few minutes ago and talking publicly about some of the issues that have been very core center of NATO, the challenges for the 70-year-old alliance that should be getting celebrated this week here in London. What he had to say, though, about President Macron, very, very key here. A couple of weeks ago, the French leader gave an interview to The Economist magazine in which he described NATO as essentially brain dead. That was a lot about the idea that the US has stepped back from the alliance, is no longer leading from the front quite so much, and we've seen these actions around Syria by the Turkish government that Macron was very unhappy with. Here's President Trump responding to that criticism.
It's a tough statement, though, when you make a statement like that. That is a very, very nasty statement to essentially 28, including them, 28 countries. I think that, you have a very high unemployment rate in France. France is not doing well economically at all. They're starting to tax other people's products, so therefore we go and tax them. It's just taking place right now on technology, and we're doing their wines and everything else. And it's a very tough statement to make when you have such difficulty in France. You look at what's happened with the yellow vests, or you look at what's going on during certain parts of their season. They've had a very rough year. And you just can't go around making statements like that about NATO. It's very disrespectful.
One other acknowledgement from the president about his meetings here today amongst Macron, Merkel, Justin Trudeau, the Canadian Prime Minister. He's also, he said, going to be meeting with Boris Johnson, the British Prime Minister. That is a closely watched meeting here in the UK because we're just a few days out from a general election on December the 12th. And the optics from the British government's perspective is not one that they're very keen to promote. They don't like the idea of President Trump and Boris Johnson being in the same room and being photographed or filmed because politically President Trump toxic here, and he's been the center of an attack line by the Labour opposition party over the last couple of weeks.
All right, Willem Marx outside of Buckingham Palace. Willem, thank you very much. All right, now let's turn to the other side of the story. Send it over to our Charlotte Reed with a look at what we can expect from President Trump's face-to-face with Emmanuel Macron, the French president. All right, I would say, Charlotte, that it's fair to say this meeting may have just gotten a whole lot more interesting given some of Trump's comments moments ago at that news conference.
That's right. There was a question mark to figure out in what spirit would President Trump coming into this NATO meeting and all these bilaterals, including with President Macron this afternoon. Well, now we know after this press conference, a pretty punchy conference here. President Trump quite critical in particular about the digital tax in France. So let me remind you, this came after the Trade Department, the US Trade Department yesterday published a list of goods, of French goods that could be put under tariff, but 100%. And this is the conclusion of an investigation that started in July when the French Parliament voted this digital services tax of 3% on companies that make 750 million euros in global revenue and 25 million euros of those in France. President Trump was very critical about this tax already in July. They came to an agreement at the G7 summit in Biarritz to put the OECD in charge of coming for a global framework, an agreement for a digital tax across the world. President Trump was on board at the time, and now the US Trade Department published their conclusion on the investigation that started in July with this list of products, including champagne and leather goods. That's why we see some of these stocks down on the French market today. Now we'll have to wait and see on whether President Trump wants to actually impose those tariffs after these recommendations. After this press conference, there's little doubt on how he feels about it and how he's potentially likely to actually impose them. So no doubt all this will be on the table when he meets President Macron this afternoon here at Winfield House, the US ambassador's residence here in London at 3 p.m. London time.
Charlotte Reed outside of Winfield House. All right, actually, Charlotte, we're gonna stick.
all of them. Twitter, although I guess I do pretty well with Twitter on the other side, but I'm not necessarily in love with those companies. But there are companies. They're American companies. I want to tax those companies. They're not going to be taxed by France. So France is going to put a tax on them. It was totally out of the blue. He just had the idea. Emmanuel had an idea. Let's tax those companies. Well, they're American companies. I'm not going to let people take advantage of American companies, because if anyone's going to take advantage of the American companies, it's going to be us.
And there you had it, President Trump here at this press conference at Whitfield House here in London, ahead of his one-on-one meeting with President Macron this afternoon. That should be a very interesting one, so we'll keep an eye on it. Brian?
All right, Charlotte Reed, really interesting comments from the president there about U.S. technology companies. I know you got a big day ahead, Charlotte. We appreciate you being there. We'll look forward to your reporting all day long. Thank you very much. Well, not to be outdone by Europe, do not forget this little U.S.-China trade war thing. And there looks to be another ramp up in tension between the two countries. Chinese state media says its government is preparing a blacklist of what it calls unreliable entities that could lead to sanctions against American companies. The action is in part a response to a bill sanctioning Chinese officials that are allegedly involved in human rights abuses. Beijing has been threatening to publish a similar list since May after the U.S. imposed restrictions on Chinese company Huawei. Well, we are just getting started. And when we come back on this Tuesday morning, is yesterday's market drop a sign of things to come? Maybe not, says your next guest, unless one thing happens. What that one thing is ahead. Plus, if the trade war was not enough to spin your head, Trump out with new criticisms for Fed Chairman Jay Powell. We'll bring those to you. And later, one of the most influential voices in energy joins us exclusively. Why this week's OPEC meeting may be one of the most intriguing in years. A look ahead, a lot to do. We're back right after this.
It's every municipal bond investor.
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroens excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroen Swappage for full T's and C's.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
All right, welcome back. It is 5:12 here. Now, moments ago, I told you that futures, they were higher coming off of yesterday's market downturn. I stand corrected because over the commercial break, futures turned negative. Why? We had some new headlines just crossing out of the president literally moments ago. The president saying, quote, "I have no deadline on the China deal, and it might be better to wait until after the November 2020 election." So if the market was hoping for some kind of a trade deal right now or very soon, the president's saying, hey, maybe it's better to wait until after the next election. Literally those headlines crossing moments ago, and that is what pushed futures from being up about 30 points to down 44 points, a 70-point swing in a matter of minutes. This is why trade matters. And your next guest says trade matters with Europe as well, and there's one big thing that we need to watch for in these markets. Matt Maley is Chief Market Strategist at Miller Tabak, and he joins us now. Matt, listen, these on-again, off-again headlines out of China, the market is, I don't want to say used to them, because obviously we saw the futures just turn down, but they've been going back and forth now for the better part of a year and a half. You believe the markets can hold up here in the face of that unless Trump follows through with these big European tariffs?
Yeah, it's because that's something that the markets really aren't pricing in right now. And it's also, of course, that we worry about the December 15th tariffs with China and whether they're, he might put it off till after the election, but does he decide, well, enough progress is made that we can postpone the tariffs? But there's no question that the situation with Europe is something we have to be very concerned about. We're also seeing a situation with their interest rates. I mean, with Madame Lagarde coming in as the head of the ECB, it looks like they're not going to be, this negative interest rate policy, which has been killing their banks, is not something that they're as high on as they were under Draghi. And of course, part of the reason our interest rates here have stayed low is because of negative interest rates in Europe and other places around the world. If those go up, that means our interest rates will move up a little bit anyway, and it won't be because of a better economy. That's not necessarily a good combination.
So if we get a combination of the December 15th China tariffs and these new proposed tariffs on French goods, what happens to stocks?
They get clobbered. I mean, it's funny. December 15th was the time. Well, I mean, at least 10% from the highs, at least, I think. I mean, we won't open that way if it happens when overnight and suddenly the market's going to open down 10% or anything like that. But I believe that that's going to be something that a lot of people are focused on. First of all, it's priced in that this will not happen, in my opinion, number one. Number two, a lot of the assumptions for next year in terms of earnings growth and economic growth are that we will get a phase one deal. And if we don't get that leaves the uncertainty out there. That keeps capital spending down. And so a lot of these assumptions for next year will have to come down. So it won't be just a short-term situation. It'll be a longer-term situation. So I think, it was funny because December 15th was when last year was when the Fed Chair Powell came out and made his negative comments about interest rates and how they could continue to go up for quite some time. It would be very weird that it would happen on the same date this year as well.
Yeah, I mean, so if we get all those things, we could get that 10% market downturn. I mean, of course, last year, Matt, we know what happened, and that was ostensibly on a more hawkish Fed, although I'm not sure I'm sold entirely on that. I mean, the problem is, and correct me if I'm wrong, I'm not making a statement, I'm asking you an indirect question, which is I don't want price to perfection, or at least the market's had a good run. Valuations cannot support, I assume, any kind of big trade war with Europe. Is that really the issue?
Yes, I mean, we don't have valuations that we saw in the year 2000, but I don't think we'll ever see that again in our lifetime. But they are still very, very high, and they are, they are not just here, but in other places in the world. Even though Europe has been lagging badly, their valuations are kind of near where ours are, and they really need. They don't want further tariffs to hurt their economy further. So yeah, we don't have the situation where exactly what you said is exactly right. We're priced for perfection. We're priced for, number one, the tariffs not coming on, and number two, the economy doing better next year. If the tariffs, especially if we get a double whammy from both countries, that's going to be very, very, very hard.
Well, I appreciate you saying that, Matt, because to be honest, I'm not even sure what I said. But so there's three scenarios out there. Number one, as you just laid it out, we get both tariffs, the December 15th on China and Europe. Market, as you says, gets clobbered. Scenario two is we get the December 15th tariffs on China, but let's say we don't get Europe. Then what?
I think the December 15th the tariffs on China is a big problem. It's still we have a significant sell-off. Again, we have a different situation with the Fed, so I don't think we get the deep 20%, basically almost bear market, but deep correction we got last year. But I think it will be, in that near that 10% movement. If we get both, it'll be more than 10%. There's so much of what we're basing on for next year. The assumptions for next year are based on not necessarily a resolution, but at least a phase one deal or something coming together. And definitely no further tariffs. I mean, people are hoping for a rollback of tariffs. I think part of that is being priced in. If we don't roll back tariffs and on top of that add tariffs, that's going to be a problem.
Okay, scenario 3 then would be Trump is bluffing. We don't get any new tariffs on China. Maybe they push it back a few months or some goodwill gesture. And we don't get tariffs on Europe. In other words, the situation we've got right now. Does the market keep going higher in that scenario?
It certainly could. We have this melt. We could have a meltup, but as you say, the market is already priced for perfection. So if we got a little bit of a dip, then would bounce back. But I think back to this level, you'd really, the scenario where we're talking about where people say it could melt up from here, really is based on people just chasing things because if you're way ahead of the market, you want to stay ahead of the market. If you're behind, you have to play catch up, and that's with the institutional investors. Other than that, I think we've already seen an unbelievably strong move here since October lows. It's up 8% in just 7 or 8 weeks. The market's overbought on a near-term basis. Valuations are stretched a little bit. I think the market will just kind of drift sideways, maybe a little bit higher if some of these threats again are just head fakes, and we could close somewhere at the end of the year where we are right now.
And okay, so I love it. You laid out the 3 scenarios, and we're kind of putting you on the spot. I know that it's early, and these comments are breaking. Dow futures down 77 points right now, Matt. Is there one safe place to hide? If you want to stay fully invested in the market, like most of our viewers probably do, but they are worried because they don't know what's going to happen with tariffs, do biotechs look like a fairly safe haven right now?
Well, I do. They are overbought. They got hit pretty harder than the rest of the market yesterday. So they are overbought on a near-term basis, so they could pull back a little bit. But we have a situation where I think it was fairly obvious with what happened with Senator Warren. She came out too hard on this healthcare for all situation and for healthcare in general. And we saw how she's fallen pretty significantly in the polls in the last few weeks. And you see how she's reacted to it. She's pulled back, saying, "Oh my gosh, this is not a winning issue." So I think that fear, that headwind that have been facing the group is behind it, and it can move higher as we move into the election year and beyond.
Matt Maley, Miller Tabak, nobody rolls. Called an audible. You're like Tom Brady of the financial markets. You threw the audible at you. The markets are turning down. You roll with it, Matt. We really appreciate it. Great stuff. Have a great day. We'll see you soon. Thank you.
You too, Brian. Thank you.
All right. Still on deck. Is your kid on TikTok? They probably are. Then you got to hear this. A lawsuit filed in California where a user claims her data was being sent to China. But first, today's big number, 1.2 trillion. That's how many barrels of oil OPEC nations claim to have in proven reserves. Venezuela, the OPEC nation with the most reserves, followed by Saudi Arabia and Iran. Speaking of OPEC, we're going to have a preview of this week's big OPEC meeting and 3 reasons why it's one of the most interesting in years. Futures down 85, big numbers. We got a lot to do. We're back right after this.
There are plenty of parties over the festive period. They'll have food and drink, music too. Some will even have rides and fireworks. But one has all that, plus a big something extra. Big Game 12 is London's biggest rugby party. To watch Harlequins take on Leicester Tigers from just £17 a ticket for children and £27 for adults, go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
This winter, there's no place Like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
All right, welcome back. If you are just joining us, we had a fairly dramatic turn in stock futures in just the last 10 minutes or so. Futures, when we came in this morning and began the show, they were higher. Not up a lot, up about 30 points. Now we are down 85 points. The reason is that moments ago in the UK, President Trump said this about China trade.
I have no deadline, no. In some ways, I think it's better to wait till after the election. You want to know the truth? I think in some ways it's better to wait till after the election with China.
All right, I know the audio not perfect there. What President Trump said was maybe it's better to wait until after the 2020 election to deal with China. In other words, putting it on the table. The potential for a China trade deal could have to wait until next year and even after the election. Those comments sending futures down. We are off 81 points right now. Well, health insurance, software, and a big biotech deal. Those are topping your stocks to watch right now. First up, United Health expects earnings in 2020 to come in largely below current analyst estimates. However, it does see revenue coming in above forecast. Shares, kind of like the news, balancing out the stock higher a little bit. All right, shares of Coupa Software, they are trading lower this morning. This despite better than expected quarterly results and an upbeat outlook. Company is dealing with higher costs. That stock off 3%. And here's your big mover of the day. Shares of Audentes Therapeutics. They're doubling. Japan's Astellas Pharma striking a deal to buy the company for about $60 a share or $3 billion in cash. Audentes' experimental drug is being developed to treat a rare genetic neuromuscular disorder. That stock up 106%. The ticker there is bold. I would say that is appropriate for that move today. All right, straight ahead. What CEOs are doing, again, that may tick off some shareholders, is Jetgate back. That story's ahead. Futures off 88, and we're back right after this.
Payne thinks it makes the rules.
So, Minister, do you really think you can lower taxes and increase funding for the NHS?
Get an in-depth look at all the party's spending promises. From the NHS to house building, the Times and the Sunday Times will guide you through. Pick up your copy today or visit thetimes.co.uk.
The Honda Jazz, the car that feels fabulously small on the outside, yet deceptively big on the inside, with its incredible storage solutions and magic folding seats. Not to mention the suite of advanced safety features. And now with the small but big Jazz event, it's available with 0% APR representative and 5 years complimentary servicing until January 31st. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush, all with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Ah, Christmas, a time for sharing gifts and laughter. and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
All right, breaking news. There may be no trade deal deadline. President Trump saying moments ago that a deal with China may not happen until after next year's election. That shocked the markets. Futures losing more than 100 points in minutes on those comments. Can OPEC save the hard-hit U.S. oil and gas industry? Would they even want to? It is one key storyline ahead of this week's big meeting. The executive director of the IEA will join us exclusively in moments. And hanger it up. CEOs reportedly keeping their corporate jet perks off the radar. And that's sparking a big tax backlash. It is 5:29 a.m. here on the East Coast. And Worldwide Exchange rolls on right now.
Now I'm feeling so fly, like a G6.
All right, welcome back in. Good morning. Thanks for being with us here on this Tuesday, December 3rd, 2019. I am Brian Sullivan. All of a sudden, the morning got a lot more interesting because stock futures, they did about a 100-point round trip in moments after the president said a short time ago that he has no deadline on a China trade deal. Listen to this.
I have no deadline, no. In some ways, I think it's better to wait till after the election. You want to know the truth? I think in some ways it's better to wait till after the election with China.
All right, joining us now is American Enterprise Institute economic policy analyst Jimmy Pethokoukis, also a CNBC contributor. Okay, Jimmy, I mean, these comments happening moments ago, we're running on the fly here. It's a busy morning. Futures now down 107. Are the markets, I know you're not a markets guy, but are the markets overreacting a bit? Because we've never had a trade deadline. Yeah, we got December 15th, but that had been moved back. I think these are some of the first comments that we are hearing, though, about pushing any kind of a deal back till after the election.
Yeah, listen, I don't know which forecast you've seen, but pretty much every bullish forecast I've heard for next year involves at least a trade war pause, if not a trade deal. The last 24 hours have not felt very pause-like, nor have they felt very deal-like. In fact, it does not shock me that the president has said that this might be until after the election, because in the end, I don't think any phase one trade deal with China is going to go over very well politically in Washington, D.C. I don't think it's going to be particularly strong, especially given all the national security concerns about China. So it doesn't shock me, but apparently markets are a little surprised.
Well, I'll tell you what, maybe the shock should go the other way. And because to your point, and I'll see you and raise, in the last 24 hours, we just got those comments about maybe wait until after 2020. Okay, that's new. But in the last 24 hours, we have the very real threat now of more tariffs on $2.5 billion worth of European goods. Europe, of course, said they will react. And tariffs on imported steel and aluminum from Brazil and Argentina. So not only did we get a roll back, we arguably got a ramp up. Maybe we should be asking why the markets aren't down more.
Yeah, listen, let's say we had a phase one trade deal. Given what we just saw with the Brazil and Argentina and what we've seen previously from Mexico, there's really no such thing as like a done deal, because the president can always return to these situations and say, you know, I don't like something else you're doing. Let's go back to tariffs. So it's sort of like a forever trade war. If any forecast is built on some sort of new normal of trade peace, again, the last 24 hours suggest that is really a meaningless hope.
Well, it's kind of like, you know, and again, I don't mean this to be insulting in any way, but it's kind of like a parent-child relationship in some ways, where it's the president, you know, the parent keeps threatening one thing. At some point, does the kid stop listening? Does Europe and China, I'm not calling them children, but you get my analogy, which is basically, do they finally just say, you've cried wolf too many times, we're just going to go about our existence? Or do they really have to listen to these threats and take them seriously?
Well, I think given that the president has actually put tariffs on countries, he hasn't just threatened it, and really that is really the core, I think, of the Trump economic agenda, really more so than the tax cuts. I think I would take it very, very seriously. It's something he can do unilaterally. If there's anything we've learned over the past 3 years, is that getting trade deals is very difficult, but the president starting trade conflicts and levying tariffs is very, very easy, much easier, I think, a lot of people thought it was, and it remains a very, I think, potent and easily grasped tool in his toolbox.
Okay, well, I don't know if you heard these. You're probably getting into the studio and get ready, Jimmy, because the president also today making comments about taxation. So for our viewers that maybe aren't familiar, what the president is mad about is what he calls this digital tax in Europe. Yeah. He says basically like, listen, you're not going to tax our companies. We are going to tax our companies. Here's exactly what he said. I want you to listen and respond.
I'm not going to let people take advantage of American companies, because if anyone's going to take advantage of the American companies, it's going to be us. It's not going to be France.
What do you think?
That is really sort of amazing. These are supposed to be our sort of national champion companies. And listen, if anyone's going to screw with them, it's going to be us. To use your family analogy earlier, don't you pick on my little brother. I'll pick on my little brother.
Yeah, I like that. It's like, yeah, you're not going to tax them. We're going to tax them. Wait a minute. What did I just say? I mean, that's kind of how it goes. I mean, you've now got arguably a three-pronged, maybe not trade war. You're getting it. We'll keep going. You're getting into like a scuffle with a kid in the recess. You got two other kids on the sidelines. You start insulting them. Pretty soon you got three kids around you. I mean, is the U.S. strong enough to handle this? I mean, our economy's been chugging along. Tariffs haven't seemed to matter that much to the macroeconomic. I know there are specific companies that have certainly been affected. I'm not minimizing that. But is the U.S. strong enough to take on three kids on the playground, Jimmy?
Or I'll take it off the playground. It's like a guy in a bar saying, I'm going to take on all comers. Certainly, listen, there's been a lot of debate about the impact of the trade war on the economy. I always like going back to those business investment numbers. That was supposed to be the heart of the Trump tax cuts, boosting business investment. We really only saw it for a very short period of time. I think it has had an impact. And again, listen, 10 days ago, Goldman Sachs came out with a very bullish, pretty bullish report for 2020. And the key to that report really was kind of a trade war pause. Instead of a trade war pause, we're getting more flare-ups around the world.
Yeah, and the markets right now, we're down 97 points. I guess to my point, maybe it's interesting that we're not down even more than we are, given this 24-hour ramp up that we certainly have seen. Also, by the way, Jimmy, I think we set the record for metaphors and analogies in one interview segment.
They were coming as fast as the trade wars.
It really was. Like, we just opened up metaphor fronts, just like trade war fronts. Jimmy P, it's 5:35 in the morning. Hey, buddy, we appreciate it. Great insight as always. Thank you very much. All right, coming up, what you need to know about this week's big OPEC meeting. Futures right now, they're down 106 points. And we've got an exclusive interview with the head of the IEA. He is live in Paris. And we're back right after this.
When your skin is feeling dry and crinkly,
this winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
The S in Audi S-Line stands for many things like sporty, stylish,